Test, test, test. All right. Good morning, everybody. So to start off the morning, we saw some kickers to open up. You'll see in SPY, we had a 3 into the lows. So everyone stayed short until the close. It opens here, therefore short covering at the open. Now, this puts us a little closer to taking yesterday's highs out, and then we'll have to see if they stay there or we're just going to triangle they out, stopping out some of the shorts and then continuing back in the direction we've been going. So that is the initial target of this kicker is yesterday's highs. And you can see we're already getting pretty close to taking that out. And then the question becomes, does it stay up there or does it come back? Today, we'll see energies inside XOP. The energy sector made some lower lows to yesterday's lows and is firming back up. So energies are still relatively firm, along with OIH making some lower lows and firming back up. Looks like we will see utilities as well, still firm, so more defensive posturing there as a 3-2 day to the upside, still inside week for now. And staples firm up a little bit as well. If we look at tech, you're going to see tech inside day firming up closer to that 2-2 kicking kind of variation in here, similar to the SPY and the Qs. Dow is a 2-2 day back up in the Dow Jones. IWM is a 2-2 day back up. So we do see some firming up here. And SPY, looks like SPY just became a 2-2 reversal back up. So today we got 3 of the 4 indexes with Qs inside day, but 3 of the 4 indexes are reversing up. Good on Discord? Good. And for those of you guys in community stream, feel free to use the community stream chat. And thanks to everyone joining in on YouTube. Now that we have these 2-2 days, it's really just up to the market here if they're going to stay that way. So SPY 2-2 reversal, it has a magnitude to try and take out 680.08. If we go to the US 500 futures, we'll see yesterday we had this broadening formation 3, and we're above it at this point. So it's expanding. On a 12-hour basis, you'll see this is a pivot machine gun. So with the daily reversals on indexes, we have all these shorts. Potentially, we're coming back through that range, taking them out. Now, the thing with being at high day here is it's got to stay that way, right? If it's a daily signal, it's just got to stay up there. We're just about 15 minutes in, so look at the second 15s of the day, and we'll see SPY. Initially, they start as twos up, and now you can see how we've taken yesterday's highs, and this is going to be our broadening formation in here. Like so. And this is why you don't have to be the first one in right here up at the morning highs, because it might not go anywhere. We want to see them stop some guys out, and ideally trying to get after it. 21230 continuation. Yeah, very nice. Right there on the US 500 this morning. Yeah. Really just, I'm not in a big rush right away this morning. More interested in getting those 3060s kicking in. Second here. So on a daily basis, we have 79% of utilities, 75% of real estates, and 60% of financials taking yesterday's highs. However, we have about half the market as an inside day at this point. So because of that, we can't say the whole market's recovered, although the indexes are, more firm. And we have about 44% of energies two down, but they're all green. So you'll see energies, like we were saying before, still firm, but they're twos down on the day. You can see SPY so far, they take yesterday's highs and they start coming back in just a little bit. So slight higher high and back in. On weaker names, something like AMD, it's reclaiming that morning outside bar below 199. At this point, we're still nowhere near changing that daily open on the indexes. So you can see Dow Jones and IWM. These would be your broadening formations to start off the morning. Some slight higher highs to yesterday there. And Dow Jones, it's going to be very similar like this. AMD fivers, you can see coming off the reclaim level around 199. So we'll see if that one's weak enough. SPY reverses after the morning highs with the Qs, Dow, and IWM. All weakening a little bit. We would want to take those morning lows. If we're going to cause anything to change, that daily open on SPY has to change. So we're still a little bit of ways away from trying to make that happen. While the indexes pull back a little, we still see energies at the highs, XOP near the highs. Technologies came back in off the fiver with the SPY and the AMD as well. We still got about 8 minutes on these 15ers, which means they could firm up as we get closer to the second 30s of the day. See the fibers tick down on SPY. They didn't change anything. They didn't reclaim the morning 3 so far. In the energies, PSX just became 3-2 up 30 or 15 minute, setting up the 2-2-30s in the energy sector. PSX. You'll also see FANG setting up the 30s with PSX going 3-2 up 15 right now as well. It's a little bit weaker. PSX is one of the stronger energy names, along with MPC. So if MPC, FANG, and PSX all setting up 30s into the second 30 of the day. Meta is another one we can be watching for those second 30s along with the energy sector. We'll see Meta forming a hammer 30 minute, and you'll notice where this is happening. Way at the bottom of this range. Now, the only thing we don't have that we'd want to see is a range to come back through. You see there's nothing to take out in this range to the left. So we'll see. It is occurring on a gap down, so there could be exhaustion of the sell on that gap down, but we'll have to see. Right now, all I'm doing is I'm just going through anything on the 30s that's 2 down in green, seeing what's setting up. You'll see SPY here, so they went down, didn't do anything, didn't change the day, didn't reclaim this 3, they just back tested it, and they start firming back up again. So this would be the fiver sellers stopping people out, and potentially the buyers showing back up to try and re-break yesterday's highs. So we'll see. At the end of the day, what's important is, can we get out of this broadening formation that we have above us? Because if not, it's still going to be acting as resistance up here. You'll see IWM, very similar, red fiver, and then they start coming back through that. Dow Jones, still a little bit weaker off. And Q's, very similar as well, still trying to take yesterday's highs in the tech. See SPY, they're still below that broadening resistance, so for now it's still acting as resistance to us. AMD is still a little weaker in the semiconductor sector, reclaiming that morning 3 still on the 5-minute. For those of you guys that remember, or you in premium, 322 core weave still going. It's not likely to hit its target this week. However, this still is going to have a nice big 22% range to work with going into the end of the week and next week. We also see things like APLD pretty firm as well from our Turnaround Tuesday list. For next week, they firmed up this morning. And MU is one of the few semis that is still confirming, also coming from our Turnaround Tuesday buy list. And you'll see they went 222 today, following through. So notice AMD's weaker since AMD is not going up today. NVIDIA is also strong with MU, although much less in comparison. So you see SPY still acting as resistance. So they went down, came back, tried to buy it, didn't work out, starts dropping back in. So as we get a little closer to the second 30 of the day, this would be closer to the 2-2 15-minute reversal, which is an attempt to take out the morning lows. And then potentially, if that were to work, all the way to yesterday's lows. So you can be watching for that. As far as the Mag 7 is concerned, we really don't see that much going on. Maybe Apple takes out those morning lows on a 15er reversal. Let's see, Google inside 15. Meta, they have that 30 still, so they're a little firmer. Microsoft's also setting up 322 15-minute. Still very much an inside week in Microsoft, so maybe they do stuff, maybe they don't, but they're trying to take the morning lows. So the second 30s of the day opening it up in about 40 seconds. On the gappers, you'll see Wells Fargo, shooter 30 to cause an outside day to the downside. PNW, you got a nice broadening formation in here, maybe for some end of week profit taking, if that were to kick in. For now, things like DDOG and Net, PNW, they have been stronger, so this would just be profit taking, at least in our opinion. We got the inside 15 3-1 PNW in order to try and cause the 30-minute reversal in PNW. So we'll see what the second 30 has for us. So on the second 30, if it is not red, it's not trying to change the day. So right now, SPY goes green and inside. So they go firm, but they're just full inside bar here. We go to the 15s inside. So for now, they are just consolidating until we can either take the 15 low out or the high day out, which has a little more distance. You don't have any signals to get that going. Relative strength, we still see staples, utilities right under the morning highs. Energies are about to be 30s up, so that's where you do have a lot of strength, a lot of evidence. XOP, XLE. CVX goes hammer 2230 reversal in the energies to the upside as a gap down, slight gap down buy inside day still. So for now, they're just sitting inside 15s, but you'll see they did go green to red. So 2-2-15 down SPY. Pan W, 15 inside down Pan W. Trying to take 30s down as profit taking. It's not a weaker name, but we'll see. AMD, closer to the 322. Energies are still right at their 30 breaks up. Hughes goes 15ers down, Dow, IWM down, with IWM shooter 30 to the downside. So you got small kappas coming in. You can see how the second 30 of the day is very important because you take the first group of traders, put them into a losing trade. Now, it doesn't guarantee we're going to get our outside days just because of how small these ranges are, but we'll see if these guys are weak enough to change, what SPY and Qs are doing. We have a magnitude, again, to make low of day. US oil is 2-2-30s up. Yeah, so oil firmed up. And this week we've been seeing, ever since some of those oil, refiners got hit, we're seeing a lot of correlation between oil and what indexes are doing. So the fact that oil gapped down today caused indexes to gap up. So if you want to be, paying attention to oil, that would be one reason why. So far it's a simultaneous break on the 15-minute, but we need those 30s to kick in if anything's going to change. And the reason that matters is because you'll notice if SPY doesn't take the morning lows out, it's not a reversal, it's a higher low on the 30-minute. So this would be higher lows and then potentially higher highs again, which is why you want to see things get broken. We want to see the 15 stay below 670.40. If it's one penny above that, it's not going to work. And it would have to take that out if we're going to change anything. So utilities still going to high of day, so still a 3-2 day to the upside, and the second 30s of the day confirmed. So there's buying in utilities for sure going on this morning. In the rest of the market, we're not seeing much follow through of buying. It's pretty much straight up utilities. And if we go to our stats, we'll be able to see that. And we won't see on the 60s. We actually have to go to the 30 minutes. But we'll see it here. See, 40% energies, 40% of utilities. The rest of the market's relatively weak / inside bar. So how are we going to change that is our question. See, SPY is still an inside 30, so it hasn't changed that. Hughes is still inside 30. Dow is still inside 30. IWM is the only one to take the morning lows. So what does that tell you? So far, the sellers in SPY, Qs, and Dow, they're not willing to sell down there, right? They're still inside bars. So how are we going to change that? Energies, we see a lot of the twos up coming back in right away, so we're not seeing much follow through there initially. You can see an XOM, they're coming back into the morning outside bar, which means they're attempting to take those morning lows out again as a 3, as profit taking. Which might be able to help the market if those energies were to weaken up, since they're one of the leaders, or at least one of the stronger names this morning. Right now on the 30s, we have about 1,000 stocks in our universe that are inside bar. 353, which are 2 down, and 173 that are 2 up. So there's a very slight bias on the downside, but the majority of our stocks, about 1,000 out of 1,500 stocks, so 2/3 of the market, currently a consolidation on the 30. Two, 1, 2 day. No. You see SPY, that seller, they're still here on the 15 trying to change that. They only got 6 minutes left until that closes out. The Qs is doing similar. Dow Jones, there's your shooter 30 down, 32230. So this confirms IWM as the second stock to take the morning lows as a reversal. And Qs and SPY technically should follow suit if we're going to see that all work out. Yeah, MU is a 222. 2 up, 2 down, 2 up. One of our members said 212 day, but it was 222. You can see how the 2-2 reversal on SPY is just about to take it out for you. The reason we're watching SPY is just because it's so thickly traded. It's going to be easier for everyone here to play that, even if you're across a different country. But got 5 minutes to see if we can get those guys in losing positions at low a day. If we go to the US 500, this is huge. Where's this going to go if this is correct? Way down there. Here's your broadening range. So what you can see is if we go on the 60s, if we can take those morning lows out on SPY, we'd have a good chance to try and take out all these nearby pivots here. If not, you can see this would be the high of the previous broadening formation right here. This would be acting as support if we can't take that out. So when you see this inside bar here, it shows you that they're retesting all these highs. However, it can cause a reversal if it slips through there, takes all this out. So that's what we want to see. And it looks like we're going to get it on the second 30 of the day. At least now. We go back to our AMD. We mentioned on the 5-minute. Reclaiming 199. It's now trading 197.44. Still not the weakest name in the world, right? Tech is holding up a little firmer. It is 3331 on the 30 and nowhere near changing that. So may not be able to fix that prior to the flip. See some 30s close out. Dow Jones also has one of those very beautiful 60-minute broadening formations in here. You also have some targets sitting just below that broadening formation, which makes it more likely that we will end up picking through there. So if energies are going to firm up, you did see them stop some guys out initially, just anyone that's got a tight stop in here, and then go inside 3-minute, inside 5-minute. So still waiting to see if that buyer is going to come back. Right now it's just, we would say, profit taking. So we'll see. For now, there's no setups to do that. But we saw tech reverse, real estate's reversed, staples reversed, industrials reversed, materials reversed, healthcare reversed. Pretty much the whole market. And there's your magnitude on SPY, low day. Now we don't know, right? Are they going to be able to get below that? Normally what we'll see if they're going to break through it is some initial slight profit taking and then just pounding right back through it again. Dell, let's see. Dell, 2 going 3 week. So you could say, well, the market's weaker. Dell is still firm. So if we go look at our stats here, you can see we got about 30% of the market going down. If we look at how many things have reversed so far in the second 30 of the day, you have 370 reversals to the downside, confirmed by about 500 trends. So it's still only about a third of the market that's a little weaker here in the second 30s. Qs is still inside 30s with tech, so they're relatively a little stronger. Utilities was still 2 up, so it's a little stronger as well. Outside of that, there's, we're hard pressed to find. Yeah, so we'll just say for now, tech is stronger. However, we have more downtrends than uptrends. So as we still got 16 minutes on this 30, so they could still become 2. Right? We're not going to say that can't happen. But what's going to happen is this 15 reversal, you'll see in the tech, 2 up, 2 down reversal short. It only lasts 15 minutes. You only got 15 minutes for that to work. So in about a minute here, it's going to close out, and then we don't have any evidence for price to go lower. It may continue. We get the new bar and they continue lower. But once that closes out, we don't have that reversal on the 15 anymore. And we'll see at that point, tech is then inside day, 2 up week, and 2 down slightly green month. So we would have no reversals unless we get those 30s, 60s kicking in. Sarah's looking at IREN. It's an interesting one. You got this big outside month, and they're right here reclaiming it on the month. The week, it's like almost a 3 on the week, so they're almost did what they were supposed to do. Missed it by like 5 tenths. Imagine Sarah might be just trying to scalp that. I personally wouldn't. I'd prefer to take that 30 right back down. Like this, off of that. So you see PNW, they close out RevStrat 15. So in the technology, PNW did not take the morning lows out. Tech, I want you to see this. So the 15 closes out. Notice how it goes green right there. The second that goes green, that seller technically disappears. However, it's just retracement. So they're retracing this move. It's not reversal because they would have to take out 130, 37 to reverse this. They're nowhere near it. So you can decide, I'm just going to stay short and see if we get this continuation. And we do. 2 down continuation. And then the question becomes, does it stay there? Right? Similar to everything else. If it starts coming back through that, it might go 3. For now, we're still inside 30, so that continuation didn't change any of that. CQs is still inside. Dow is still weaker, so Dow continues down, still weaker. IWM continues down, still weaker, and you know where it's going too. It's trying to go down there at 247 and go outside day at 46.59. And SPY, there's your 30s also confirming to the downside. So you just want to see them stay down, because what you'll notice is anyone that's long from this morning's session, they're in a losing trade if we stay down there. If it starts coming back into that range, we could reclaim the morning low and go test the morning high again, just like we did in here as your broadening formation. If you're like the US 500, you'll see it maybe clearer. This is that broadening formation. 3 goes up, goes down, and you want it to stay there. So if it starts firming up, it's trying to go back up again, right? You want to stay below all that stuff. We go to the 60-minute. It is currently a 2-2 reversal 60-minute with your pivots here to speed it up. So that's a good thing for us. And like we said before, if this is kicking in on the 60, we're trying to go down there. At least that would be our prerogative. Anyone that bought the morning session, they're going into further loss. Another low day on SPY. Utilities is still firm. Industrials getting wrecked. Real estates takes out the morning lows. Staples confirming its reversal. Tech confirming its reversal. Semis morning lows going 2-2 reversal 30s in the semis now, which was one of the stronger sectors. So let's gap up sell to start the day. And you'll see on the 60-minute, that's a big old shooter bar forming there. We got an AMD. AMD finally kicking in. We mentioned to you the reclaim of 199, now trading 196.77, and we still haven't hit target yet. 196.50 is the initial target on AMD. And then if it stays down and we have a big red day, which we could, AMD 189 would be that much bigger target we actually would want to see. So we'll see how the market reacts. It's still early in the day, but for now, we've identified that seller. They showed up on the second 15 of the day, confirmed by the second 30 of the day, and they're not slowing down. SPY is, in fact, going for outside day, and we noted that right when we reclaimed that was a possibility, which is beautiful, right? Your IWM shooter 30 right there. You can see destruction. Triangle they out and go the other way. Sells on ES and stop where? No, we already said it. The 15 right here, 2215 SPY is a simultaneous break. We saw SPY Qs down, IWM all go 15 reversal. And then the 30 breaks, that's when you can add to it. And now that the 30 is going in our favor, break even the stop should end up being somewhere around here, depending on how aggressively you're getting in more position. But it would look like this. Break even stops from the 15, good to go. The 15 signal is right there. We said 6,737. I think I might have said 670.40. Yeah, but 670.37. We said at any time it's below that, it's going to go to the morning lows. And now we technically don't know. All we know is we got this 30 signal. If we're below this, 668.97. If it stays below that, we're going to go to yesterday's lows at 665.90. We're going to go 1 penny below that. However, if it were to come back above that low on the 30, then we don't know. It might go back all the way to high day. So again, we have to stay true. The breaks have to stay down. As you can see right now, what's going on? Everyone's short. Stopped out anyone long in the morning highs. Now there's some profit taking of those shorts going on. Now, right now, it's not reversal. If you look on a 5-minute basis, the reversal occurs here at 169.80. But you want to be aware of that, right? Look at our broadening information. We already did what we were technically supposed to do. We made new highs and new lows. So this profit taking, we want to see it stay below those previous lows if we can. That'd be the only way we want to see this continue lower. Let's take a look at our stats now and see if those have changed. You see at this point, it's still about 45% of the market, 37% of the market going down. Utilities still leading the upside. Almost all the energies went 2 up in red. So those energies came back in, which is interesting to see. They've been buying them all week. So you can see, go back to that 5-minute. No 5-minute signals, 0 signals to try and buy that back. If we go to that 30-minute, you'll see when it comes to signals, you must be above them or below them. So we look at this, it goes 5 cents higher and then doesn't go anywhere. Boom, 44 cents lower. There's no reason to have a wide stop. Because if it's going to reject, it's going to look just like that. Normally bigger, actually. For now, SPY is inside bar at low a day. Qs is still inside 30. So again, tech is still relatively strong. However, they just tick up very slightly and then come back. So they haven't changed much. Dow is inside bar at low a day. And then IWM firms up a little bit here on a 225 minute. So you can see anyone short in the morning session, this is forcing some short covering right there in this range. Now, is this anywhere near changing and taking out the morning highs? Technically, no. So this could just be stopping some guys out and then continuing lower. So you don't have to be terrified if you shorted up closer to highs on the 15s, but we'll see. We will have the second 30 of the day coming in hot in about 8 minutes, or second 60 of the day coming in hot about 8 minutes. And that's going to matter to us because the second 60, much like the second 15 and the second 30 of the day, will either confirm what's happening or reverse what's happening. So if we just look at right now and just imagine price closed, the second 60, it could reverse the 15-minute and then you just go back through the morning range trying to go to high day again. That's a possibility, right? Because things change direction on the second 60 of the day. At least they tend to do that. So where would be the strongest stuff, technically speaking? It'd be technologies, because they still haven't taken the morning lows, but we've got this inside 30 here, which it could take those morning lows on the flip. We still have 7 minutes. Materials, definitely not. Healthcare's nope. REITs, no. Industrials, probably not. So there's really not definitive strength that I see on a sector basis, which is what we're looking for to see any change in that broader market direction. Right now, I'm just going through some of the losers to see who's the losers. Like all the gold miners are getting sold, with gold and silver getting sold. US oil is still firm. There's some leadership, like Fastly, FSLY, still gunning, but it's coming right up into exhaustion risk, coming into 2587. So they've done what they're supposed to off of that 3-2 month, taking all that stuff out. SEDG, a little bit. We'll see. So what we can do for identifying those leaders is we can take some of the bigger gains on the day, anything, let's say, over 3%. We can identify anything that has inside on the 30-minute. So Solar Edge inside 30 after jumping up this morning. And I believe it's also inside day up. Yeah, or 222 day up. So it still has a target on that in your solars. Core Weave, after making new highs, goes inside on the 30-minute, which we'd prefer up because it's a 322 week up. NBIS is inside 30-minute. Interesting one is DOCN, DOCN 3-3 on the 15-minute. If we go back to those indexes, you'll see SPY after the top of our broadening range acting as resistance. We go double inside 5 are now at low of day. And inside bars show agreeance on price. Buyers and sellers agree on price here, which means they agree on price below that daily open. So the question then is, who's the first one to throw the next punch? Is the buyer going to try and buy it up, or is the seller going to try and sell it down? We got 3 minutes to the new 60 opens. And we'll see if those 60s confirm the downside we've had so far, or they negate by changing that direction. It's like industrials are having one of the worst days in the market, going outside month now to the downside. EMD will be closing at 331 30-minute. With the semis, you can see the semis a little different. They actually took the morning lows, and notice they're back above them. So if we go to the 60, we're still going to be nowhere near taking out the morning highs on a 60-minute basis, but potentially the 15-minute on the flip if they do firm things up. We know MU is a little stronger there, so we'll keep an eye on that. LRCX is also a little stronger with a hammer 15 in the semiconductors. And also a 2-2 reversal day. And a 2 going 3 week. So LRCX would be a valid option in the semis if they firm up. Ooh, Wingstop. This might be a good audible call out here. Yeah, so the 22215 in Wingstop is interesting because we're reclaiming. We zoom out. If you look all the way left, you can see we're trying to reclaim all of these lows here. And I personally, I don't know if Wingstop's going anywhere. I don't know if their business model sucks, but everyone I hear says good things. So very interesting one, because we're at the bottom of this much bigger broadening formation, this all the way down here. So if that were to work, you've got a lot of range to work with, which is pretty interesting. I'm going to keep that on my other monitor here. As we get closer to the end of the first 60 of the day, we'll see SPYs closing closer to a hammer 15. Qs, Dow Jones, IWM is very similar. So we can see on the 60-minute flip, they'd be closer to trying to negate the daily open from red to green. Is the 15-minute signal would have a target to do that. So you got the 15 short in here, goes all the way down. Now the next flip, if it reverses on the 15-minute, we don't have that 15-minute reversal in control of this price anymore. But we're still, we got 7 seconds, so let's see what they got for us. Sarah's still watching iRun. You got a potential 32215er if that's going to go. Dow goes reversal. IWM goes reversal on the 15-minute. Using SPY there, or no, SPY also goes reversal. Now the only thing with this is this could really cause some just chopping them up problems, unless that 15 goes and works right away, because you'll see this on the SPY, we're inside on the 60-minute. So the best things to buy are not, SPY. It would be something like Wing, right here, Wingstop, above this, 205.23. Because we got long green bars and they're the closest to taking out those highs, it has to be stronger than the indexes. And it's not going to be an inside 60 if they actually want to buy this thing. So it makes it a better option. Now the spreads there, I'm not too sure what they're looking like. Regardless though, this will be something I'm going to be watching for next week to see if they start. You see we have this outside bar here, so if we can start coming back above that at 208.32, it gives us a target to 232. So IWM, you can see right on the 60 flip, this is where you time that reversal, boom, instant winning position. No drawdown. SPY, no drawdown. 0 drawdown. And it's hard to do it like that unless you know the strat. Boom. Now, again, this doesn't guarantee that anything here. All we know is for 15 minutes, you will have that. We have another 12 minutes left. Wing stop right there. 2 up 60 again. Boom. The buyer comes back. And notice we're doing this at the opportune moment because at the time of today's open, everyone was short. And we can guarantee that because it went from 300 to 200. Everyone's short. Who's buying this? So if we go up in there and buy it, we're causing the shorts to get out of their shorts, which should speed things up back through this. So we'll see if that can stay up there. Again, it has to stay up at the highs. We can't let things come back on us. But I do like that one. And we'll see the technologies. Tech is still double inside 30, inside 60. So they're technically still doing nothing, right? Just got to be careful of that. Although we did see the whole market reverse on the second 60 of the day there with those 15s. So you got high evidence, at least, that you got the market doing that. Utilities continues as relative strength. Staples firmed up as well. Healthcare's firmed up. Industrials go inside bar and firm up. Real estate's firmed up. Financials firmed up pretty good with a 22230. So XLF Financials, it is a reversal on the day. They still have a target on it. 5012. JP Morgan, let's see. Momentum, Goldman Sachs Momentum, Morgan Stanley Momentum. Wells Fargo 222, it's momentum as well. So got a lot of those financials confirming. However, I don't have besides today, I don't have a lot of evidence to tell you guys to do anything there. You see Wing did what it was supposed to do. He made the new high, but then comes back. So you get two options. Either, okay, get out, didn't work, right? Made the new high, it worked. Didn't go anywhere, didn't work. Or you give it a little bit of time, see if they stop some guys out and try again. It's up to the trader if you're going to be there. I'm more interested on the bigger time frame aspect of this, though. It's much bigger range that we could come back through. Looks like energy's also firmed up as well on this flip. We'll see SPY after the initial spike up, still inside 60, inside 30. They come back and they're trying to retest that. And this is what you can expect when you're inside bar. Unlike a trending market where price will go up and stay up and then go up and stay up and keep doing that. When you're consolidating, it tends to, you'll get a spike and then you start going the other way, right? And then does that multiple times. So they tried to buy it on the new 60s and they did, but they didn't change anything. They didn't reverse the 30 up here, did not take out the previous 60 high. So how do we play that then? What do we want to know? Well, we want to know if that 60 goes red, right? It would take anyone in here underwater. So that's the level. The 60 is red, we have no evidence of a buyer anymore. The other thing would be, if you go to the 5 minute, or not the 5 minute, but stay on the 15. You can see here, 2 down, 2 up. So this is a reversal up, didn't go anywhere, it went a little bit, came back. So what happened? Anyone that shorted into low day, they get stopped out. Anyone that bought in here, right there, they get stopped out. So everyone just lost, both longs and shorts, which is why we just use the tight stop, move on to the next. The next setup would be to try and go outside bar, which would cause the 60 down again. And since the 30 didn't reverse and the 60, we're not taking this out. What we'd say is they stop some guys out and potentially we get this 22215 or this outside 15 back down. We'll still have to wait. We got 8 minutes on this 15er. We're still inside 30, still inside 60. You see Dow, you got a nice move off of our actionable signal to instantly cause it to go, and then it comes back as profit taking of that because it didn't trigger the 30, did not trigger the 60, didn't change anything. You see Wingstop, we have the outside 5 minute, they tick down, they tick up, they go reversal. So right now it's attempting to go back down to 201.95, which is why we don't want the wide stop. We will eat our medicine unless you're a longer term trader, which I'm again more interested on the longer term of that one. AMD finally makes low of day. So you can see our 322 15-minute, where we have a broadening formation. It goes up and reclaims it and tests the other side of the range. Did what they're supposed to. As mentioned over here, when we reclaimed this outside 5-minute high, this 3. So now that it's made the new low, we don't know, right? Instantly profit taking, they come back in. So either this is just short-term profit taking, we get them to hit the lows again, or it's not, right? And they're fully coming back through. Just small ranges in there. Let's see, SPY, they're still inside 30-60. So nothing's changed yet there. Might be able to get the Wingstop triangle out. We'll see. Financials are still one of the firmer assets that we see. We're getting hit by like an ice storm right now. It's interesting. Do you trust this run in Bitcoin? That is the wrong question to ask, sir. It's what do we know to be true about Bitcoin? Bitcoin is currently a 2-down year, but that's also a reclaim level, right? If it does reclaim, so we'll see. It's 3 2-down quarter, but we're right at this 3 here and this 3 here. So do you trust the run on Bitcoin? It doesn't make any sense. Do you reclaim these 3s to try and go back to the other side of them at all-time highs? That's what makes sense, right? Because that's how you're actually going to time bottoms. Similar to, I'm not sure if you're going to be able to pull it up. Sadly, it's not going to let me pull this up unless maybe like a 60-day chart or something. I want to make it really obvious for you, but sadly I can't. Like last time, you'll see this. So they go up, and then right here it reclaims, boom, all the way back through here. Then they go down, and you won't see an obvious reclaim level, but what we can see is if we had a 2-bar chart, these 2 bars went outside bar to these 2. So here's your 3. So you can time, they start reclaiming this, boom, up they go. And technically, you know, this whole thing is a 3. It goes all the way down to here, which is why we use time frame continuity. Once this thing reversed here, it was green, it's reversed and it was green. That occurred 21K and then all the way up. So has not reversed. If we go to the quarter here, you haven't reversed the quarter. The month is green, so they are firming things up, but it's retracement, not reversal. This is retracing the previous move, which means right now it's trying to retest all this stuff that they broke last time. So right there, this is where they're retesting everything. And then it's a question, does it get back above that and start coming into this 3 and back into this 3 or not? SPY, we can see 10-minute, you might see it's a little clearer, the 2-2-10er, but right now they're still 2 going 315. They're still inside 30-60, which means the reversal on the 30, they did not reverse that against. Still a little closer to the 60s down on SPY. With your tiny little 60 broadening formation here to kick in. So for you 30-60 guys who wait patiently till the second 60 of the day, the second 30 of the day, SPY's a little closer to the 60s down with the Qs. And then IWM is about to take the 60s down as well. So we might get all indexes as a reversal, as a 2-2-60 minute. On the SPY, it looks less impressive. On the US 500, re-breaking back below 6697, a little bit more impressive because we have a much bigger target. And that is not just according to me, but you'll see also according to our price discovery indicator. You go like this. Price. And here it is, your third pivot to be hit in here on the US 500. And now that we've taken all the tight stop guys with, you're going to see an outside 15 minute, 2 up and red goes 3 down. It's a 3. So it's a broadening formation. And this is where it's very important to know we want price to stay down if things are kicking in. The previous lows here on the 15 are the 60 trigger. So we want to see them take that out and just go. We really don't want to see them hesitate much because a 3 is a broadening formation, which means from current low of day to this low, from this high and then back, this outside 15 minute is broadening. So you don't want to see them start coming back off the lows of a broadening formation and be in a short position, right? So you just got to be aware of that. And sometimes you get this small initial profit taking, then it just slingshots right back down. But sometimes it does not do that, right? The broadening formations tend to go both ways. So just want to defend. You're still playing in here. Because what we want to see is we want to see all indexes trading below the morning lows on the 60. And that would give us all those outside days. It's like utilities reverse their 30s. Real estates take the morning lows out again as a 60 continuation. See, tech took the morning lows out. So if we get to these 60s, let's take a look. So on the hourly breakdown, what we'll see if I can make sure it's up to date. So you see on the daily, it's very conflicted, right? Both ways. On the 60-minute breakdown, you can see we still have a majority of things going up, and then some slight things going down. So when we take out the morning lows, it's not everything. It's probably mostly things like Meta that came in. Yep. We go to Apple, right? Apple slammed them through the lows. We go to Google. A little bit, right? Outside bar. AMD, right? Still down there. So again, like we're saying with AMD, we zoom out, you got this much bigger range to play with. So if you shorted the morning highs on the reclaim 199.50 anywhere in here, or by playing the 15-3-2-2 fun to say, fun to do in here, you're good, right? You have no reason to get out. If you have a break-even stop here, why would you have to get out? It's not taking you out. You're good to go. And we just want to see it below 196.29 because that is yesterday's lows if we're going to keep following through. You see SPY, there was slight buying and then boom, right back to the lows. That's what you're looking for. Is now we want to see them expand through this stuff, staying down there. That would cause us to become that outside day. We can stay below the broadening support to try and go back to the next broadening support level. Man, took way too many puts on that 5 minute. That's funny. And the key always is we have to stay below all this stuff. Because what we're doing is we're taking everyone who bought in here, if they're still holding, we want to get them into a further loss. So they have to start really getting out if they're not already. And we don't know, right? We don't know if they stayed in that long position or if they are the guys who sold it back down here. All we know is if it stays down, it's a good thing. We go to the 15 minute, you can see now we have a 3. So this gives you the exact level right there, 667.22. If you're trading 1 penny below that, that's a good thing for the short side. Dow Jones has a shooter 15, IWM 3-2 down, shooter 15 with the reversal 2-2 on the 60 minute to cause your outside day. You see slight higher high and then boom, go the other way for us, hopefully. Take them all out. Industrials, or not industrials, but Dow Jones. Closer still to taking the 60s down. Here's the 15-minute shooter to try and do that. While this happens, energies, they're still, I wouldn't say they're super firm, but they're not going down, right? So they are firm. Financials are still inside 60. You got a lot of things close to breaking the 60s. The materials are pretty close to it. Shooter 15's down. Financials, 15ers may do that as well. Home builders, they're already taking them down. So now we're getting more of the market. Look at this on the 60s. Starting to get a little bit more. Industrials, tech, healthcare specific, breaking the downtrends here, reversing the first hour of the day. And this is your simultaneous 60s down SPY, Qs, Dow, IWM, all now have broken the previous morning lows, showing you algorithmic selling across all 4 indexes. Look at AMD. This is what we mean when we say things need to stay down, right? You can get this slight initial profit taking, but there's no reason to leave a stop, out of profit way up at the highs, because we know broadening formations exist, which allows you to short it from high day or near high day all the way back to here. Once it hits that, you just trapped everyone. Look at all these guys who were buying AMD yesterday. Everyone buying AMD yesterday right there. They're all in a losing trade. So if the seller decides to step up, boom, right? You start ripping through these guys and really causing some trouble. Now, the thing is we are at what we call then exhaustion risk. What that means is they are potentially in a crowded short position. We don't know if that's true or not, but it can become a crowded short position as price just continues to pound the lows, because eventually everyone that's day trading AMD is like, yep, we're shorting today. And that's when price has to stop some guys out and change direction. So we want them to stay down there. This would be our level of resistance. If I draw it out in yellow, this would be your level of resistance. You want to see them stay below that. We will see price many times retest that, and that'd be okay. But you want to see them stay below that. If they reclaim this range, so just get out, right? You made some money, we're good to go. Now, if we look at the stats, it's still really unimpressive. It's really just industrials, tech, real estates, some healthcares, now a little bit of materials, a little bit of communications. Just very unimpressive, at least in my opinion. Yesterday, we were seeing more stats. We can see, though, it is gaining, right? So things are getting worse. If you look at the materials, you can see it started with 0 downtrends, now at 20%. Let's see tech. So tech, we had 93 scenario ones, started with 10% uptrends, and then we went, you can see now 46% downtrends. Look at utilities, it's been a little stronger, so we'll see. Very nice on AMD, very, very nice. Very nice, we love that. And you can see how threes, everyone likes to argue on Twitter with me. It does get me really annoyed at points, but threes are broadening formations. So that's just how it's going to happen. You can see now AMD inside 5 minutes. So this causes a little bit of profit taking, but that's all we could really say it is at this point. If they're going to retrace or retest, we like them to retest or retrace as the inside 5 minute or the inside bar, because that retracement is just stopping people out, and then the seller's still there to try and just keep hitting the bid. So we'll see if they can form an inside bar for us or not there. You can see SPY, so they went slightly higher high than the previous 5 minute and come back in. So slightly stopping the guys out and then trying to go still to yesterday's lows to complete the broadening resistance to broadening support move of the morning session. We can see at this point in the US 500, this is our current range that we've got. And you can notice we just measured out. We've moved about halfway through it at this point. Now, the reason that matters to us is we've already taken out, right? Anyone long in these 3 hours, boom, they get taken out. So who are we going to take out next, right? Where are the next people we can take out to make price speed up? It'd be all down in here. And that's exactly why. You can see once we take out all these nearby targets, you can see I have all these pivots to come back through. They have to stop people out. They have to go the other direction first so that we have targets to go through. Because if this were to go, let's say, reversal back down on the 5 minute below here, then we'd get this target on the 5 minute to go into a new low day, 2 down, 2 up, and then comes back into the previous bar's range, potentially to take out the lows again. So we're stopping traders out, getting longs in there to trade against. And hopefully we can see this cause that to get taken out and give us that outside day and complete this whole big broadening range that we picked up on yesterday. UMAC, let's see it. 3-2 down in green, 60 minute. Yeah, interesting enough. There it is. That's 8% range, so it's okay. You can see AMD, there's still some profit taking going on, or poorly timed longs, we're not sure. Silver, 3-2 down day. Yeah. Now notice, why does it move fast? A 3 shows aggression, and then pivot, 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 pivot. You see we have targets. And the 3 is also broadening range. So just like AMD right now, if you scan for 3s, you can find broadening formations. Here it is. And then there's your retest to the penny right there. And then down they go. Nice broadening formation you got there. And just like SPY today on the 15-minute, right there. 2 up in red, 5er. There she goes. You see it's the same setup. 2 up in red on SPY 15-minute. Down she goes. Just like the just like everything else, right? Like the 60s as well. What days is Alex live on YouTube? So currently I am live Tuesday, Thursday, Friday. In our Discord. And then, obviously we have these open live streams on Friday. I'm not sure if we're going to keep doing these open live streams every Friday. For now, we plan on it. But if that changes, we'll let you guys know. So to answer a question we saw, someone said, you enter the sell on ES if let's say you're trading the 2-2-60 minute. I believe that's what you're talking about. Where does the stop go? 1 penny above where you enter, ideally. Especially if you're learning and you've never made money trading before. And the reason that is because like we've shown you so far, they really should go like nearly instant. Now, that doesn't mean you have to stick with tight stops forever, like very tight ones. But when we're looking at reversals, what we want to do, if we're doing this properly, is we want to time, right, this broadening range. You can see this down here. So here's the low, right? And then it gets small, it gets bigger. We want to time it right there. That's where we want to buy it. 640 or 6646. And notice why we want to do that. We want to do that because everyone's short. So if everyone's short and we buy it, we're forcing them to take profit right away, like snapping my fingers right away. Take profit, right? So it should go instantaneous. If price reverses and everyone's short, everyone should start covering their short position. And if it doesn't go instantaneous, then something else is happening and we don't want any part of it. So we want relatively instantaneous. Now, when you're doing that, you have to, if you're going to have tighter stops, you have to be willing to get back in, which means you have to know how things work. Like this 60-minute signal we told you is going to go where, Alex? Well, let's just let the indicator show you, right? Where's she going? Down there, right? And it's actually giving us further targets here. So since we know the broadening formation exists, not only do we not want line stops, but we want things to just go, right? If I know everyone's long and then we're going to short it anytime it's red on this 60-minute, it should just puke. Why would it not? If everyone's long and it's going down, it should just puke. So if we go back to the 15, at worst, if we're playing off the top of the range, like we mentioned to short the SPY this morning, at worst, you'd be going 18 points, but we don't want to do that. We want to go like 6 points or 4 points, 3 points. Because what we can do is if we look in here, we can see on the 15-minute, it didn't break. It went up, it broke, it went, look at this. 1 point against us, and then gone. 1 point of drawdown. There's no reason to use a 20-point stop. Not when you know this stuff is true. Because if you can get 1 point of drawdown, why are we risking 20 points? That's 20 trades, right? Now, not everyone's going to do it that way, but that's the way we suggest new traders to learn it. Now that SPY has hit your objective for the trading day, price discovery has done its due. You're going to see price makes new highs to yesterday's highs. Price makes new lows to yesterday's lows. Once that occurs, there's nothing else price can do today. Either it's going to keep doing that, or this is just simply going to get bigger. And we say that because we know threes are the goal of price. Price will start within a previous range like this. It'll take one side of the range becoming a trend. And if it fails one side of the range, it becomes an outside bar. Once that happens, there is nothing else price can do. No matter how high or low it goes, it's a three. And what that tells you is the goal of price is to go outside the previous range. And SPY today shows you that in full effect. For those of you guys that are on the public stream, you can check us out at stratalerts.ai. But we're going to end off the morning session for trading, and we're going to talk more about, we can hold winners. That's one thing we'll talk about. And we'll take any questions anyone from Premium has or anyone from the chat has. But that is the goal for the trading day, SPY. Now we don't know. It might go three again, right? It can go from here to here, and it can do this multiple times in one day. Or it might just stay down if it breaks out of yesterday's lows. We don't know. Once a three, always a three, can't not be. IWM went outside day. Dow Jones still is working on it, so you still have a target on Dow Jones, and Qs is weaker, just a 2 down on the day. AMD, you will see after the 5 minute, like we said, is it going to retest that level almost to the penny? Yes, and then boom, another low a day for you. And then similarly, it has to stay down there because this is a new micro triangle like this. Goes up, then down right there. So I've got one runner left in puts. How should I play it now that it's outside? So think of it in terms of support and resistance. Right now, SPY is sitting at support. Let's say you're short from up in here, or maybe you're short off the 60. If we're short off the 60, we probably should reduce that if we start seeing price come back in, or if we want to guarantee a win. It depends on the trader. And that's why we always focus on create a winning position. And I'm going to turn my camera on so when we're talking about this stuff, it's easier for you guys, for anyone that wants to see my face here. But here it is on SPY. So see right now how we're at inside bar. This is firming up. Is this inside 5 minute is a higher low to the previous one. So that's firming up. That's your short covering occurring at broadening support. So if we're short and we're short from over here or here, somewhere near the lows, maybe we reduce on that. If we have like 1 million contracts, right? Now, if you only have like 2, maybe you take one off and you hold the rest. And you're like, hey, I want to see this now turn into resistance down here. I want to see price resist getting back into this range, which is what we want to see, right? We don't want to see them come back into the range. Now, if we're short from the morning highs, we don't have to mess around down here. We're good. We just get to kick back and talk strat, right? We can find more positions because, again, like we said before, if you get this winning 15-minute signal, you're good, right? We got nothing to worry about. And that brings us to the analysis then. So if we're below the broadening support, where's it going next? It would be going to the next level, which is the low of the week, way down here. So if we're below that, it's going there. And then you might be like, well, what if we're below that? Well, if we're below that, then we have this monthly broadening formation, which is in control this month. And this is why we prefer the short. You see it's down and it's red. Where's it going? Down there, 650.85. So if that's true, that's why we want to see them go lower and stay lower this month. And that's why this 60 is the biggest move we've had pretty much in the past couple. In 1 hour, it's probably the biggest move we've had since Tuesday morning and all of Monday's trading. Just as far as sticking around goes. TLT, it stopped me out, sadly. You'll see on the month, we went 3. And what we were playing off was this 2 week. So we had 3, 2, And then like we say, you have to stay out of that. So if this is our 3 we're playing off of, it goes up, it opens here, get me out. Didn't work. And that's sad. But we'll see, maybe, later this year, and depending on what the market does, we have a 3. So we're just going to play the 3 again. So where would we, if we're going to buy TLT, technically, we'd want to buy it down in here to go back all the way through it, because that's a 3. A 1 minute? You don't need a 1 minute. No. In fact, most traders lose because they're taught that they need to use this really low time frame in order to win. The 60 minutes the most important during the day or the daily session. The 60-minute day, week, and month. That's what matters. Because if you look at the 60-day, week, and month, which I haven't had up, admittedly, I should have. If we go 60-day, week, and month, what this will allow you to do, and we do this analysis pre-market, so you don't have to be watching it. Like, we knew SPY was going outside day once that started kicking in and going red, right? So if we look at this, we're going to shrink it down. If we go to the month, we do our analysis here, and we're like, all right, goes higher highs to all-time highs, and then it starts coming back. Where's it going? Right here, lower lows to that, 650. So we're trading 15 points above that. That's a short this month. Now, if we go to this week was green almost all week. So we just had weekly buyers almost all week, which was mostly Monday and Tuesday morning. And, a little bit of yesterday as well, but mostly not. Now those weekly buyers below this, they're all underwater. Because if you bought SPY at 680 and we're trading 664, you're in a losing trade. So anyone that bought this week at all, doesn't matter who you are, unless you nailed low of Monday's session, you're in a losing trade. So this is why we could expect, now this outside day happens, this might get redder because the monthly seller is selling this week. The weekly seller and monthly seller are selling today. And then we go to the 60. When did they sell? The second 60 minute of the day. So we had the monthly, weekly, daily seller show up on the second 60 of the day for SPY. And if we know that's true, that means the month, week, day, and 60 sellers showed up here when this reversed on the US 500 futures. So we know it's attempting to go lower. And we have high evidence for that because this month, this week, today, and right now it's going down. So anyone that's like, oh, it's going up this month, incorrect. They're lying. Oh, it's going up this week, incorrect. It's going up today. It was, and then it went outside bar. So now it's going up and down today. It's going both. And then right now it's going down. So the only thing you could say is maybe it reclaims and starts going the other way. Maybe. And that's going to be up to price, right? How aggressive is this short covering if and when we get it? Ideally, at least in my opinion, I want to see this all act as resistance here. I don't want to see it coming back. You can see AMD still at the bottom of this new little fiber triangle, still expanding the much bigger one. So AMD, we get to kick back and just let them just keep going further, as long as we're below 196.35. And I actually, specifically on TLT, I still have the 2028s. I just closed the ones that were, or was it 2027? Let me see. I just closed the shorter dated ones when it came back. I'm willing to risk it a little bit more on the other ones just because they have so much time. It's more of an IV play than a directional, or not a directional play, but it's more of an IV play than anything else. Now that we've seen the market go down, tech, semis were some of the losers, real estates, healthcares a little bit, industrials for sure, they're pretty weak. But let's go and look at industrials now. So industrials just went outside on the month. So what was it meant to do this month? It was meant to take both sides of the range, and it did. So now that it's done that, we don't know. Right? Maybe it reverses, maybe it doesn't. Now, if we go on a lower time frame, though, everyone's been shorting this thing all week. So maybe if there is short covering, there might be some short squeezes going on in there. But it is one of the weaker ones we see this week. Healthcare's is still low of day. Before we take any more questions, I will check Discord in 1 second. Now that we've seen the indexes reverse and hit target, again, we don't know. Either it's going to stay down there or it's not. But what we do know is if it's going to keep going, the inside bars, you see these inside 60-minute candlesticks, will either confirm or negate. What does that mean? Well, look at the hourly right now. See how this is all red, right? Most things going down, a little bit going up. So right now, most things are going down this hour right now. Now, in another hour, once this hour closes, we'll either keep going down or we will reverse, right? It's pretty simple. And we call that confirming and negating. So look at materials. 50% of materials inside nearly, 50% of energy, 70% of financials, 34% of industrials, 55% of staples, 40% of real estates. These are all your inside bars on the 60-minute. So we have like half the market inside bar to either confirm this seller that we saw show up or negate by changing direction or going back to the upside. So what we can do is we can see the strongest names on the day. Let's just say anything over 3%. These will be your inside 60s. So these are all the strong names that are consolidating while the market goes down. So if you're going to buy anything, you want to buy the stuff that's actually going up, right? Now, AXTI, you got this 3 on the week, did what it was supposed to do this week, taking both sides of last week's range, Monday, and then all the way back through. So we don't know, but it is inside 60. So since we know 3s do expand, right, it might get bigger. You just got to realize if you're trying to play this up at the highs, you're playing a very risky game. You're right at the top of a 3. MLYS. So MLYS, already an outside day. See, it's going down this month, outside on the week, and then inside on the 60-minute. This is a good example of look at the week. Made new lows, made new highs, comes all the way back to the middle. That's all price is meant to do. Let the buyers buy at the highs and the sellers sell at the lows and vice versa. SEDG, Solar Edge. Let's see. So still have the broadening formation here. Inside 60, still has the daily reversal here. Got about 20 minutes till the 60 flipped, so I'm going to take some questions before we just keep ripping through. See, MU is also inside 60. So you can see on the 60 and MU, a great example. This is not a reversal. It's retracing, creating a higher low here. So you go to the 5-minute, and you can see an inside bar, and then there's your higher low forming on the 60-minute. Was it creating inside 15-minute back through all these short sellers? So maybe MU kicks in. Still have that outside month at MU. It is already an outside week, but again, 3s can grow and get bigger. We have targets to make that happen. So MU, I'd be watching that 15. Not a bad one to be looking at. NBIS, you're also setting up an inside 15, which would create an inside 60. Also setting up an inside 30. So we'll see what comes of that. But those are some of your strongest names. Bitcoin. So Bitcoin, we already discussed, but it's inside month. You can see inside week. And the reason it moved today, double inside day right there. 70, 80, or 70, and then 805. So it goes $3,000. It's a pretty good move. Now notice it's still not strong enough to take last week's highs. So you got to change that. Now intraday, here's your 3s. Right here on the 60-minute. So where's Bitcoin trying to go? Technically, it's trying to go back up in here and take last week's highs out. So that's what you're working with right now. That could change, though. You don't have any 30, 15, or 60-minute reversals to change that direction. So it's up to those intraday guys. Extended hours. If I opened extended hours, I wouldn't have enough time to go through it. I use the futures. But what do I need extended hours for? Right there, SPY, there's the bottom of your broadening formation. So you can see they're now coming back in. So it's not acting as resistance. They're supporting prices down there. So this is, you can see the 5-minute reversal kicking back into the range. And notice how the 3 on the daily, once it's outside bar, it's outside bar. So they start coming back into it. So at this point, we don't know, right? It might go all the way to morning highs. It might not. What we do know is we've hit our targets and did what we were supposed to do for the day as far as price action is concerned. AMD is still below and outside of its previous broadening range. We'll see the broadening formations in technologies as well. Like so. And for preference, since we know the month is red, we know the weeks are trending down, we would prefer make some low highs and try and take out those morning lows again later today. We're just not seeing it now, so we don't know. And we're allowed to say that. Now the question is who is closer to it? You can see industrials, like we said, you might see some short covering to end off the week, which there's a little bit of that kicking in there. Is it the defense sector? Yeah, defense. So defense, you'll see outside 60s and coming back in DFEN. Lockheed Martin, you got some nice 3s that you're coming back into like this. 2 down in green 60. So we weren't there right away, but you still have some range to take out those morning highs. See, NOC, same thing, 3, 2 down in green 60s. RTX, same thing. General Dynamics, same thing. So you can see all of these 3s reclaimed in defense. That's something you want to know about. And they have 15 minutes to set up the 3 2 down, 2 up reversals. So we'll see if they want to do that. So we get to the next 60-minute flip. We go to the US 500 and you can see all those targets. We did about 90% of that range from the top to the bottom. Like this and like this. So you can see they take out all the nearby targets just shy of this one. And then they have to do profit taking to stop people out. We have no more targets to take out. And that's what's causing, similar to SPY becoming an outside day. So it's causing them to take their profit, stop people out, allow longs to try and buy in here. Is everyone was short from the morning session and now took out a little bit of those tight stop guys, but is that it? Or do they want to stop out some more? You'll see for now the 15-minute, 2 down, and then 1. Is it possible to triangle they out and then expand? Yep. And that's what I keep saying. We want that to happen. If you're short from a high of day on the 15ers, you don't have to get out. Unless you, like, this is the thing. It depends on the trader. This is why, unlike most, trading communities where it's like, follow the leader. We will help you find the things you should be trading and getting into. But your prerogative is how you manage winning positions. Because you could make a winning trade, hold it for a day. You can make a winning trade, hold it for a decade, right? It depends on who the person is. So if you're short and you're like, I want to be short the market and I want to hedge against my portfolio because I have $1 million in X, Y, or Z, right there, morning highs, short, and then hold it, right? If this is your cost basis, all right, we're just going to hold. Is the price at 670.37? No, it's still $4 below that. Okay, I'm just going to stay short. Because if it doesn't come back to where you got your winning position, you can hold it. The only time you can't hold it is when you, Imagine this. Imagine SPY drops in here. You're trying to short the open. Then price goes like this. And you're like, I'm going to hold it. I'm going to keep holding my short. I'm going to keep. And then right up in here, like, oh my goodness, get me out of this thing. And then it goes completely the other way. We don't want to do that. We want to short the top of the broadening range. And then we're good to go. Now you can still reduce, right? Guarantee a win. That's fine. AAOI, the double inside 30 down. Let's see. 2 going 3 month. Creating the shooter week for next week. Just like indexes with their momentum shooter weeks. So it's momentum. And this is the thing. When you're... See how this is momentum where it's down, sideways, sideways, down? We don't really know if there's anyone that's going to get trapped in there because, you know, they did buy it up here. Indisputably, you could say, you know, it did go up. But they had more than enough time to get out of that stuff. So is this going to go instantaneously? Maybe, maybe not. We're not sure. You're also conflicted with the week. The week is still green. So if you could change the week, that'd be here, 95.18. Then we could start talking, right? But this is signal. You'd have to take out low day and then keep going to change it. So maybe. Big maybe. So far, price is being supported at yesterday's lows on SPY, so they're just sitting there at the lows. Is it wise to get into money? What do you mean by that question? SPY inside 15 at the bottom, it should go up. An inside bar tells you nothing. All it tells you is price is going sideways. An inside bar that breaks out, right? And then you can get a 2 or a 3. We have to, like, you have to understand this. Price discovery, the way it works, and I'm working on a video, which is why we're talking about it. The way it works is this. Price starts as scenario 1. This is doing nothing. This is where you lose everything, right? Tiny stop out, tiny stop out, tiny stop out, tiny stop out, just getting destroyed. Then it becomes a 2 by taking one side of the range. And that 2 either sustains that or it rejects and becomes a 3. Once a 3, always a 3. So when we're trading, we don't want to trade during a 1, right? Why would we trade during this thing when the price action is going to start on the next bar? And then it's going to keep moving and keep moving and keep moving. And then, you know, we get our winning trade. There's no reason to trade the 1. We're trying to trade the price discovery that's resulting once the 2 happens. Like if we look at SPY, opens, it's a 2 on the 30. The second 30 of the day, boom, reversal, takes them out. The third 30 of the day, boom, they continue, takes them out all the way, closes down here. And now, see, no 15-minute reversal, 2 down, 1. So as we see it, there was buying or profit taking here, which we can always expect. Once you hit a target, likely you're going to get profit taking first. And then after that, either that profit taking turns into an actual reversal, or that seller tries to come back and keep selling, which they're trying to do. There's still an inside bar. So until price discovery can get us out of that, it's just going to be a small range. And the reason the inside bars are tiny is because an inside bar is a broadening formation that's like this big. It's like 60 cents wide. That's the inside bar. You'll see they go down and then tick up a little bit, and they're just going to go chop, 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 chop till we get them out. In the money options, yeah, you could. But if you know where price is going, you can, like, let's say you're trading SPY this morning. So we said, let's go to the 5-minute. So you said we're going to hold off because we know on SPY, we're at yesterday's highs. We don't want to just buy at yesterday's highs, ideally. See, right now, SPY, they tick down, they start firming up again. But new low, we're at yesterday's highs. And you could draw the broadening formation out like this if you wanted. All right, so we're right there. They come back in. They try to get back above it. They come back in. So if we're up at the top of this, we already know if we're going to make a trade or frame a trade here, we want to be short if it's below this level, 671.67, we want to target 665.91 to the penny. So if we know it's going down there, we don't have to buy in the money. You can buy the put that has a strike here or here or here. You could even buy the target strike if you wanted. On 0 DTE, that's how you get the biggest return. It's trying to go, at your target. At least if it moves fast, right? If it doesn't move fast and you're wrong, you just want to get out. But since we know how far price is attempting to go whenever we take a trade, we can go out of the money and make the option go in the money. We can make it do what it's supposed to and go in the money for us. Because that way, when we get the bigger ones, like this is not a very impressive chart, right? This is $6. But let's go to like Palantir on the quarter. Or actually, we'll go to APLD. 12-month, 3-month, month, week. So this is one we saw on a yearly basis. We saw this. Triple inside year broke here at $11, giving us a target to try and go to new highs. Because remember, price discovery, 1, doing nothing, 1, doing nothing, 1, doing nothing, 2, oh my goodness, a trend. Now it's doing something. So you can see it breaks at 2, starting new price discovery. And what does price do? It makes new highs and new lows. So where's it going to go? New highs, new highs, new highs. So it goes new highs to all of these highs there. And that's the trade. So that's a 250% return. Now, if we go to the month, you're going to see how that happened. And it's so obvious once you understand how price discovery is going to work. You'll see it everywhere. So look at this, 3. So that's a broadening formation. We can just mark it out support and resistance style and call that, right? So they go into new highs and they reject, doing about 90% of that range. So almost everyone's short here. Then it goes green on the month, so they go back to the highs. Right, so they make new highs again. And then they reject those highs, going all the way to the other side down here. So what's your broadening formation look like? It looks like this. Low, new high, new low. And that can be known when this is happening in real time. So when price goes above 583, where's it going? Up there, right? It's at least going to 1241. So you can time it from 5 to 12. That's a $7 move. You could use a $10 option when it's sitting at $6. It can be $4 out of the money, 40, what, it'd be like 50 or 65% out of the money option. And you can time that properly to go in the money, right? It goes to 15 at the highs here. And then it never comes back, right? This goes all the way up into 35. So you can time the price discovery properly to go in the money. And that way you can reduce your overnight risk as well. If you're willing to give up the whole position if you're incorrect. But if you size that way, if you're wrong, you lose everything. Then when you are wrong, you were already prepared for it. And by the way, SPY, back to the morning lows. So you can see that seller did come back off the inside 5-minute. And you'll see how that inside bar starts a new trend lower, which we're seeing here. The 60-minute, notice that signal's still going, and it has 4 minutes left on it. So the 60 signal's still going for now. Dow Jones, same thing. IWM, similarly. Qs, similarly, and Qs is actually down the most so far, at least seemingly. Healthcare's at the lows. Industrial still a little bit firmer. And that's with that defense sector. Real estate's still at the lows. If we go to AMD, destroyed. Remember how we said it's going to retest and do this stuff to the penny? It did. You can see how that broadening formation. High, low, and new high right there. There it is. New lows. Beautiful. So this smaller broadening formation causes the bigger one here to act as resistance, which is how you want to time that if you're going to do stuff like that. OIH. So you got to realize when are you doing something? Because when things happen matters. So look at the week right now. It's the end of the trading week, and it looks like this. Is it anywhere near reversing up next week? Technically, no. We go to the day. Is the day, does it have a signal? Is it setting up a signal? Technically, no. Now the year and the quarter, right? We have that for evidence. Go to this month. They're not buying this month. So oil's strong, yes, but this month it's not. This day it's not. This week it's not. So if you're going to buy oil, what do you want to do? You want to let them go below this 3, right? Into these targets down here. You want to let them go down and then go and buy it, because we know price discovery would work like that if that's how we're going to time it. Yeah, so is there a library or an overview place that you can start first? Well, I'm glad you asked. We have a few different things. So I have some videos, David, on my channel. I have some live streams that are like 5 hours long if you want to learn everything. Now, I wouldn't suggest that, actually. Instead of that, if you want to get a very good in-depth knowledge of it, we can send you here. So that'll be a direct link to Rob's course that he created as the guy who invented all this stuff. Or not invented, but discovered all this stuff to be true about price. You can see SPY, that 15-minute seller, changed what's going on back to the morning lows. So now, again, we don't know, right? Either it's going to stay down or it's not, but we have high evidence that we want to see them keep going. Right? We want to see that stuff just puke. We're looking at 662 on is that SPY that you're talking about? Yeah. So if you recall, and this is the beauty in it, we talk about this stuff every day, guys. So when we had these 3s, we said if we go above them and come back in, we're going to the other side, like that. When we went 2 up and then closed back in, we were like, yeah, that might be happening. And then on Wednesday, we saw the 322 simultaneous daily break, and we're like, that's obvious. Right? It's going down. Then yesterday, we're like, yeah, it's going down. And then today, it ticks up, and we're like, maybe they're just stopping guys out, and then we're still going down. So this is all still, you have a 3 on the day, you go above it, and then you come back below, and it's going to go to 662. So that's still true. The only thing is we got to be below yesterday's lows. Since right now we're a 3, we need to be below yesterday's lows and stay down there, knowing that we are at risk of this outside bar broadening formation on the day. But at this point, the year, the quarter, the month, the day, the week, the 60-minute, they're all red. So we have the yearly seller, or we had the yearly seller in here, the monthly seller, the quarterly seller, the weekly seller, all of those guys. Now the question is are they going to come back and sell more? Because 70% of trading is done by algorithms. Do they have more to sell, right? Or is that it? They just sell the first 2 hours of the day, and then they're going to call their week early. We don't know. What we do know is if they're going to sell more, it's going to be below the morning lows, like this, as a 2 again, because a 2 is a trend. So we went 2 up, reversal as a 2 down, continuation right now as a 2 down. And again, right at low a day, we're not trying to add at low a day like that, because we know that's where profit taking occurs from. So if we just go and look down in here, we just look at today's session. They bought, they're forced to sell, then they tried to buy again, and they were too weak to take the morning highs out. And then we sell all the way down in here. So everyone that's winning right now is short, which means we want to just stay down at the lows, right? Now there might be slight triangle layouts, right? Like we could go like this. But we just want to stay down there. We don't want to see them start ripping back through this. Rob put or I posted Rob's course for Christmas on Twitter. So it was my Christmas gift from Rob and me and Sarah and everyone to you guys. So if you go to my Twitter and you just search for Christmas, you'll find it. $662.39 today. Yeah, so let's just go through. I mean, we have evidence of the seller this year, this month, this week, today, and right now. So is it going to do it today? It is doing it today by definition. If the 60 minutes red. Right now it's, slightly green, so there's profit taking going on. And that's something you'd want to know about if you were shorting the previous 60 and you haven't reduced yet. You could reduce on that if you wanted. However, I still think it's more likely we do end up taking out our targets here. So if the 60 is red, for sure, that's happening. Now green, not sure. We don't know. We're at the bottom of a 3. We have to be specific for that. Now what we can say on the 60 is this. This is our 60 triangle, and you can see we closed below it. So what are they doing? Retesting, hopefully, at 665.28, just about. And if that is going to retest, it would be off of this little triangle in here. You have a good day as well, Maddie. Glad you had a good week. Ooh, this is fun. Let's see. Nice dream, but should come with a disclaimer. Expect to lose all your money, but you'll know all the theory after multiple years of watching videos and making trades. I mean, I guess it depends on who you are, because if you are trading broadening formations and you're buying at low and selling high, I don't know how you're losing a ton of money unless you're not doing it correctly. Buying high and selling low, that'd be one way to do it. Like if you were listening to us as far as what we told all of our investor traders this coming year, told everyone to go after energies. And we told them that last year and this year. So if you're an investor, you're killing it because we know the strat. 3 paired with the signal right here, back through the 3. You do the QQQ. Q's is inside year. You can see it's a doji on the month. So they're really not doing much this month. However, they just went green to red. So we'll see if that changes next week. You go to the quarter, still inside quarter. So they're not doing anything this year or this quarter. A little bit of selling this month. And then this week is a 3 shooter. So what matters for us next week is, do you get out of that 3 or do you go back through it? Since a 3 is by definition a broadening range, you can either do expansion of that range, right? Starting to actually cause the quarter to break, hitting that month redder, or you will come back through that range because a 2 will either stay 2 or go 3. So we can see one example of how that might play out. Like in here on the quarter, you get a 3, then they go down and then come all the way back through it. Another example would be if it expands. So for example, you get a 3 here on the quarter, this big green bar, and we can see price breaks out of it and then expands and gets bigger. So those are the only 2 options. They're either going to expand it or they're not. I need to get in the XOP. Yeah, so it's going to be tricky, but we know exactly what we're looking for if we're going to do it. So we've already seen them go back to the highs, and this is what you need to look for. You need to see them come off the highs because this is a broadening formation, so you can try and cause those highs to break again. So if you look at this whole thing, you get red bars, in this case a red 3, another red 3, and then it green, all the way back to the highs, and then some slight red bars, back to the highs, red bars, back to the highs. So we're looking for red bars to close. You'll see so far this year, they've bought every single week in XOP. That's a good thing to know about, right? XLE, they've pretty much bought every single week. And you'll see, when did they start buying this week? On Wednesday, right? Sell, sell, sell. Wednesday buyer shows up to make the new high. And then again, we don't know. What we do know is it's going to be hard to make those energies not go up this year, especially with Iran stuff going on now, confirming our analysis. Look at US oil, right? It's still jamming higher. And this is not good for indexes, like we said. If you want to watch it, you can, but US oil is inversely correlated to indexes at this point. And from the gap down buy, they're already up 2%. So SPY, they're not down 2%, down 0.7, but makes sense. You can see right now in the 60s, they retest the triangle and they're still staying out of it. So short from the morning session, and you get to stay that way. Just wait. How far can you go? Learning the strat system, thankful for it. Very awesome. The main thing I would suggest to a new strat trader, so you don't end up like someone who goes in here, you learn it, and then you're like, all right, go in, doesn't work. All right, I'm just gonna keep going. Okay, doesn't work. Okay, go in, keep going. And 2 months later, you're like, this doesn't work. It's like, you got to fix something's wrong then. Because if you're doing it correctly, it will work, given at least, a couple weeks to let things even out, because not every trade's a winner. But if you are timing the threes, again, I'm going to keep bringing your attention to threes. If you are timing them, either to break out or come back through them, ideally going back through them, what we're looking for is you have a big 3, a big move in one direction, a big move in the other direction. And if we go to there's a reason my Twitter is this. They buy, then they sell, and then we buy. So we let them sell and buy, and then we go after it. This is the whole secret right here. Because, like we've said, you're taking a crowded short position. Everyone's shorting in this, everyone's shorting, boom, it just reversed there, gone. They're all screwed. So you're taking crowded short positions and timing the actual reversal of that position. The same way, you can take a crowded long position. Everyone's long in here. And you can try and time the reversal up in here against those guys to force those guys to get out. And that's all the broadening formation is. You're taking crowded positions and going the other way. Because if you've ever heard, you know how there's a saying, what is it? It's like once your cab driver starts telling you about something, it's probably like the opportunity is gone. Like that's the top. When your cab driver starts telling you what to invest in Bitcoin, that's the top, right? The reason that happens is because once Bitcoin hits $200,000 or whatever it is, if you wanted to buy Bitcoin, you could have bought it at 100K, 110, 120, 130, 140, then it hits 200, they've already bought. So everyone's holding their Bitcoin. They're like, oh, this is great. Look at Bitcoin's at 200, whatever, thousand. And then one guy goes to sell it and take profit or reduce or sell short, whatever he's doing. They go to sell it. By the way, SPY new low a day, the algorithmic selling, still true. Year, month, quarter, week, day, 60. Everyone's selling. So watch out for the shorts. Let them play out. But everyone's long. And then the first guy that goes to sell, there's no one there in the range to buy because everyone already bought. So what does that look like is the question. It looks like Palantir. And we're going to go back to one time frame just so if you're on mobile or something, you're good. It looks like Palantir. So look at this. This is a yearly chart. When Palantir goes from 45 to 550, Do you think everyone's short this name, or at the very least, anyone that wants to buy Palantir, they're in a big losing position, or, you know, they're no longer there, right? They're waiting to buy it. Yeah, right? If you buy a stock at 45 and it hits 20, you're probably getting out of that. So when it goes to 5, no one's long Palantir. At least no one that's aggressively buying is long Palantir. Everyone that's trading in Palantir, the only winning position is shorts. So everyone's short this stuff. And then you'll see the broadening formation here. It goes new high, new low. When it starts firming up, the second it starts going from, 5, 6, 7, 8, 9, it starts going back through this range. You're taking everyone short and reversing it on them. And you're like, hey, what's everyone doing? It's like, yeah, well, I shorted Palantir at 20. Oh, I got it at 32. I'm better than you. Well, I got it at 16. I still made some money. And then it goes from 8 to 10. And they're like, uh-oh, now we all have to get out. And then boom, it goes really fast. It goes instantly, or relatively instantly, in your favor. So that's what you're doing. If you're not timing the broadening formations, you're never going to have this actually work for you, because we have to go against everyone else. The only way you could have made money today is shorting against the guys who bought the first 15 minutes of the day on SPY. Everyone else, you might have made a little bit, but you're not in a short position and still winning, right? The winning trade had to be the broadening formation. So if you're doing that properly, then you're good. And if you're wrong, it's okay, because, and I wanted to get back to this Palantir example. If you're wrong, it's okay, but you have to make sure you're doing the big ranges. It's like Palantir, this 3 on the quarter. When it goes back above 890, where's it going? At minimum 3350, but we want to see all-time highs, right? The top of this larger range, $45. Because we made the new low, the new high, the new low, and then right here when it reverses, it's going up there. And this is not hindsight. This is something we posted to Twitter real time, suggesting that this would be the case, and it did happen. And you can go search that yourself. But if you know that's true, how many stop losses can you take risking, 50 cents, $1 to make $45? Well, if you risk $1 to make 45, and I'm not saying this in terms of risk reward, just in like a thought process way, because we don't use risk reward. But if you stop out, you lose $1, stop out, lose $1, stop out, lose $1. Then you get the one that works. Maybe it's on your 5th trade and it goes $45. Not only are you going to make it all back on just the initial trade, but if it's going to go 45, you can add to it when you get the chance to do so. So if we nail Palantir at 890 and then it goes to 20, we're up 100% a share. So if I have 100 shares, I'm up $800. So if I have $800, I can risk, let's say $500 and add to it with another stop. If I have $1 stop and I'm risking $500, I could buy 500 shares of Palantir, risking their money. And then the biggest one, the one that goes 45, 50, 80, $100, is the one you added to. And you don't need to add much. You can just add once, right? And that's, if it's really going to go, you're really going to go. And that's why these small ranges, everyone wants to be a day trader. It's like you can, it's just going to be much more tricky, because if you short high a day, especially with options, when SPY makes low of day and then starts coming back to here, you might be at break even on your out of the money option, because this range is not that big, right? It is down pretty good today. I'm not going to say we're not. We're almost down $10 today. This is a good trading day. But most trading days on indexes, for example, they're not as they're not as good. It's mostly because we have the VIX and oil and everything going right now. VIX is at 30. And when the VIX is at 30, we say make hay while the sun is shining. Each 60 is going to matter. And that's what's going on today. And give me 1 sec. Yeah, 2 + 2 = 3. Yeah, true. But you can see SPY, look, it tested to the penny 665.32. If you go and rewind the stream, we pointed to that level. I think we might have said 665.29, but it tested to the penny, guys. That's crazy, isn't it? And you'll see the broadening formation that did it. And we drew that out too for you guys, right there. There's your short right there. And you'll see this is, again, this is not the biggest range. What, $2? They're really moving, but Not the best in the world. However, we're getting pretty close to taking out those weekly guys. So we want to see that level. 662.38 would be ideal scenario for us today. And then after that, maybe they, drop 10 more points. Maybe they don't. We'll see. We can see some profit takers did show up at low day. So say mind the profit taking, right? We just want to make sure we're not a losing trade. And that's a big old 3. So you can see on the 5-minute, 3 here, and then goes back down, and then a 3 back into that one. Looks something like this right now. It's just really small stuff. But you can see just how much they're moving. $1 in a minute. SPY's moving around a little bit, that's for sure. Go to the VIX, see what they're doing. Yeah, the VIX isn't really flying, at least not for now. 0 DTE, 0 DTE, 0 DTE, yeah. In from 60, yeah, if you're in 0 DTE, that's the thing, is you just have to, if you hit your targets, you have to do something. You either have to, ideally, what I like to do if I'm trading shorter term is like reduce half. And then that's my winning position. So if I take $1,000 position, it goes 230%. I'm up like 1,000 something bucks, or actually be 200%. I'm up like 2,000 bucks. If I reduce half, I guarantee $1,000 win. And then I can now risk that $1,000 trying to get more whenever a new signal presents, instead of, just letting it all go. However, when things are really moving, you will blow through levels, and that's what we want to see. Kind of like today, it's not the craziest stuff yet, but kind of like if you look at Monday. So Monday, you'll see these 3s here on the 60. There's your broadening formation. Watch this. This 2 down green that's telling you it's a potential 3, and then it closes. Then it reverses here, reclaims that, breaks the morning high, breaks this, goes all the way to the other side of that, closes above it, and you'll see it acts as support in here. So when you take that, it goes boom, right? It just takes everyone out. That's the one where it's like, if you have 0 DTE, yeah, you're good now. If you're up 400%, you're good. You don't have to do anything besides maybe reduce a little bit, and then you can add to it all you want. But you can see it's a little different than today. That was much better than today, although we still have the rest of the day to see. You can see how that outside 5-minute gives you the new little tiny baby broadening formation at low day. We go to AMD from the short this morning. They dropped pretty good. Still not at its target, and we still have 4 hours left in the day. So the redder this day is, the more likely it actually is to go down there. Because the redder it is, it shows you the more willing they are to actually sell AMD, right? You can draw this a few different ways, but we don't want to sell at low day. We always want to stop them out and then try and go for it. IWM, let's see. So it's never looks like, because when you say like, it's similar to, if I look at the clouds and I'm like, it looks kind of like my neighbor. That cloud there has this funny little nose. But it's not actually your neighbor. If we're going to talk about reversals, it either is true or it is not true. So if we look at IWM, that is a 2-2 reversal 15-minute. However, it is not in force. Reversals are only in force above their actual reversal level, so 246.84. And we know that's true because broadening formations exist, right? It could go like this and go outside. So we have to hold and sustain the break. Because you'll see every big move is when you fail. Failing to hold yesterday's highs, big move. The 15-minute reversed, failed to hold the 15-minute highs, big puke. New low a day, failed to stay below yesterday's lows, there's your profit taking. Right, and then the inside bar, now it's starting to chop them up a little bit. But it either is true or it is not a true. Like industrials, let's see. You see they reversed the 30-minute as 212. They're still inside 60, so they have not reversed the 60. So they're stopping guys out, but they're not reversing. Come on, SPY, give us low a day. You can just see all the 3s in here. Bang, bang, bang. Buyers stepping in? No. You just have to realize right now, we're 2 up red year SPY, 2 up red quarter, 2 down month, 2 down week, outside day down, 2 down 60. The only evidence of buying you would ever have would be like a 5 or a 15 minute, if that's, or 30 minute, if that's true. Even then, if the 60 was green right now, it would still be considered profit taking. So we have no evidence of real true buying right now. The only place we will have evidence of that is where we have full time frame continuity. So if we look, you know, there's some buyers in materials. This is a 60 minute. There's some buyers in materials, so we can take a look there and just see. Even then, right? So materials is red on the month. It's green on the week. So you have the weekly buyer, it's red on the day. So that weekly buyer may or may not be here today. We really don't have any evidence. Not there, at least. If you want to find the places where the markets are actually going up, you go like this. 2 up on the 60. Or actually, we'll go like this. So green on the month. Greater than 0. Green on the week. Green on the day. And then you can go 2 up on the 60 minute. These are all the things going up right now. For sure. GDXD. So inverse gold miner ETF. You can see what they did. They reclaimed this low. Where's it going? It's trying to go up there. 58.78. It's pretty obvious. We go to JDST. Same thing. They reclaimed this low with this hammer day. Changing their direction. Dust. Same thing, right? So you can see it's all the gold miners at the top of the list going, are the inverse gold miners. So you go GDX, 3, 2 up, 2 down, boom, there's the other side of your 3. Just like SPY, 3, 2 up, 2 down, and then other side of the 3. We're still waiting on that to complete, but it should. We go to financials, STEP. So STEP is a reversal on the day. It's going up right now on the 60. It's still inside week, so they're not doing much this week. Short QQQ ETF. See, it's going up this month. It's a 3 to the upside this week hammer, and I'm telling you guys, next week this is going to really matter. This outside hammer, because it's a 3, and then you'll see the daily still going up. So we got a UCO, which is your oil, right? Which is US oil as well. Oil's going up. So what are they buying? They're buying inverse gold miners, and they're buying oil. It's like, is that a bull market? I don't quite believe so. Doesn't sound like a bull market to me, does it? And that's something I wish I could show you guys. Sadly, I cannot show you what we're working on. Let me just say, there's going to be some very, 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 very awesome developments coming down the pipe from the Strat Alerts team. So FSL1 would be a short right now because it's the top of the run information and a crowded long. So this is the thing. It's about evidence. Right now, the day is green. Yes, it made the new highs. So it did what it was supposed to do here, making the new highs. And it's coming back in. The 60, and this is very, very important. If the day is going to reject, we have to be below the previous 60-minute lows. Because if we're not below it, it can't be going lower. It also shows us there's no aggressive sellers going or in here. So right now, all that happened, it went up, it retraced with profit taking, and then right here, the buyer's still sitting on the bid or something, right? Now, the way that would change is if we take this out, 2, 4, 5, 9. However, when things occur matters. You only have 33 minutes left until that 60 closes out. So you'd have 30 minutes on that to work. Now the question then is, what is it going to do? It's like, well, is this a crowded long position? Technically, yeah, right? Everyone's long, but that doesn't mean that they're done buying, right? And that's the thing with how this works. Timing reversals has to do with when things happen. Because, for example, let's go to the quantum QUBT. Or actually, let's do IREN or something. So look at IREN, right? Jamming all up in here. Now, if we're trying to short this every time it goes up just because it's going up fast and there's a lot of people buying it, that's not what we're looking to do. What we want to do is time when continuity changes at a broadening formation. So, for example here, the obvious example is this. New high to all-time highs, crowded long position. And then it comes back in, trying to go down there to 48.20. So we have a range. We go to the top of it and start coming back through it. So we can time that. And you will see the broadening range. And the bigger the range is, the better it's going to be. So this is how big it was. Notice, if we're framing a short, right? They buy, they sell, we buy. So what would it be in the opposite? They sell, so we let them do that first. We don't have to be the first one. I am not muted. Test, test, test for those in Discord. But okay, so you can see they sell, they get stopped out, we go and sell. That's how we can think about it. And this is just another way of teaching you guys broadening formation. There's a million ways to learn it, but understanding you want to let them do stuff first and then go for it. Let them sell, let them get stopped out, and then we can sell now that they're stopped out, and there it is. And the bigger that range, the better. So if we go to the month, when did that happen, Alex? Well, look at this. Green month. We're not going to short that. Green month, right? We prefer not to short that. Red month. Right when it goes red here, it's going outside bar. Below 73.07, 38% target. Down they go. And now we can see, this is what we would call starting to get a little bit stuck. We'll see if they are strong enough. We have this 3, and the buyer is here this month, but the seller has control. It's a 2 down. So unless we're above last week's highs, that's all they got, right? They bought a little bit. We'll have to see next week. And you can see how this daily broadening formation, they're really chopping them up. It's really tight stuff. And again, we don't like the tight stuff. We want the big ones, right? Long green bars, long red bars, big ranges. Look at SPY, long red bars. That's what we're looking for. We go to the month, nice long red bar. Yeah, we got 18 days for that to keep playing out. And we know it's trying to go to 650.85, hopefully by the end of the month. And if that happens, look at this. Pivot, target, pivot, target, pivot, target. So it could go even further down in here. We have all of these buyers we could take out if this were to go from bad to worse, right? But we'll have to see. Right now, it's just short. AMD, also still down as well. They're sitting at the lows inside 30. SPY's, or Q's is inside 30. Sorry, I have to clear some charts here. SPY is inside 30. So what we would say is downtrend, 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 downtrend firms up. Not a reversal though. So if we wanted, let's say we wanted to go time, like I want to buy the dip on SPY. What we would actually do is this. We can go to this list that we had of things that are green on the month, right? We're just going to refilter this, greater than 0. So green on the month, green on the week, copying, green on the day. And then we go to the 30 and we look for a 2 up. Right now, you can see if we go and look at this, they're all scenario 1. So these are all inside bars at this point. Now, if we look at who's 2 down before, these would be potential reversals back up on the stronger names. We'll have to see inside day flute, end phase. They've already hit their daily target. This is a little stronger today. Core weave. See, like on core weave, we saw that inside 30 and they came back in. Now you can see now that they've stopped some people out and there's some sellers in here, maybe you could get it back up. I like those 30-60 signals. We don't have any of those yet. So right now, most of the strong stuff, we don't really see any signals going on here. Let's see what we got for twos up. So JD, the Chiners. So here, JD, you can see it's a reversal on the 30. However, see how we're stuck in the morning range? You only get these little targets in here. So it's going to be harder to deal with. Let's see. Yeah, we really got nothing recovering that we're seeing with a lot of evidence, at least at this moment. At best, JD, but there's no trade in there for me. That's for sure. Let's look at FSLY right here, inside 30 down, right? So if we're trying to time this, even though we don't have, the day is still green, the week's green, month green, we're trying to time this is how we do it. We'd use a nice tight stop, and we'd say if this is going to work, it should just go, right? If we're true, right? If what we think is true, this is a crowded long position, this is a great place for us to start stopping those guys out because we got the top of the broad information. If that's true, they should just start getting out, right? So you have the 30, and then we'll have to see if that's 60. We want to see that break and just go. And with a 2-1-2 reversal, we normally give that a little bit more room like this on the 60-minute. But there it is. So we'll see what happens when you reverse against someone who bought the first hour of the day on Friday and has been buying since Monday's open a couple months ago. I'm not suggesting trading that, but I'm just going to watch since we had a member bring it up. Or not a member, but Discord user bring it up. And while we just let that, we'll see what happens. Do we go 3 to the upside, or does it actually break down? While we let that happen, I'm just going to quickly run to the bathroom. I'll be right back. And if you have any questions or things you want to chat about, we have about an hour left in the stream here. So just drop them in YouTube chat or drop them in community stage, and we'll help you there. Give me about a couple minutes. All right, we're back. You see SPY and Qs, Dow, IWM, still at the lows, but inside on 3 of the 4 indexes. And IWM is a very beautiful 30 shooter, was it not? Good stuff from the top of the range. Let's take a look at the chat. FSLY and 62. Yeah, so you can see this is what's happening. They tried to sell down, right? Seller in here. But notice the day is still green, the week is green, the month is green. So what is that? It's either profit taking or it's poorly timed just because it hasn't changed anything where it's actually going down. Today it's still strong, this week, this month, still going up. So what's happening? Reversal on the 5 minute, and they're trying to take them out of their shorts. They sold. Now, this doesn't guarantee it's going to go outside bar, but at this point, you got no evidence of a seller. The 60 is green. The day is green, week is green, month is green. You'd have to see that go red if they're actually going to change anything. And this is why we don't like trading in conflict, where if it's just the 60 in your favor and the day, the week, and the month, and everything else is not in your favor, you're probably trading a really weak or a really strong name compared to what you should be trading. Like FSLY was not a short. IWM, that was, right? Little bit better. SPY was, right? And this is because SPY is actually red on the day. If we're going to have a day that's going to close, 1% lower, it's got to be below its open, or else, it's not red. It's not going down. So we go to FSLY. You got to change that to red, which you can use signals to change it. At this point, they have not changed anything. We go to SPY. You can see at the bottom of the range here, we can redraw it like this if we decide to. There's some profit taking, and notice how that profit taking is timed with a 3. It's outside 5 minute. They go 17 cents lower and now $1.40 higher, stopping these guys out. NASDAQ at the moment, 312. So this is your problem. Do you see what you're doing here? Let's think. If we were trading within the last, couple hours, what is everyone doing? They've already sold short, right? Like you see it go from here to here. And the problem is most people think, oh, it dropped 100 points. That means it's bearish. What it means is everyone already sold, right? You missed it. This is all down. Missed it. Because we've hit our target. Go back to that hour. And I'm going to go to the US 100 because I was tracking this yesterday with everyone. But we can see 3, 3, 3. So this broadening formation, see how it just goes boom, 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 gets bigger all the way to the lows, gets bigger again like this. All the way back to the highs, gets bigger again like this. All the way back to the lows, and then see how it goes green here on the 60? What's happening? Profit taking. Everyone's short in here. What are they going to have to do? They're going to have to take some profit down here. So if you're shorting right at the new low, right where they're going to take profit, where the breakout traders are going to get destroyed, you're going to get destroyed with them. You're shorting into a crowded short position. That's not what we do. If you're trading this 312 down into low day, the second it hits low day, everyone's short today. There's no longs today, which means everyone's short. If it reverses, you're in the worst trade you could be in. And the reason this is true and this happens is because of crowded positions. And the way we think about it is the best looking chart and the worst looking chart are 1 bar apart. In fact, they're not even 1 bar apart. They're 1 moment apart, which could be a day, a 60 minute, a week, whatever it is. They're 1 piece of time apart. And what does that mean? The worst looking chart in the world looks like this. So if we're trying to buy something, the worst looking chart in the world looks like this, right? We're breaking support, as most people say. We're below support. Support is now becoming resistance. This is the worst looking chart in the world. No one would say this is bullish. The second it's 1 penny back above that, boom, now it's a bullish looking chart. Do you see how that changes? 1 bar to the next. In 1 bar, that can change. Because a broadening formation tells us the worst looking chart can turn into the best looking chart in 1 bar. So if we're buying and selling, we need to make sure we know that to be true, right? We can be long into this stuff and be like, it's breaking out. This is the best looking chart ever. True. And then it comes back in. Oh my goodness, this is how the worst looking chart ever. I should be shorting this. Or at the very least, making sure my stops are in profit and I've reduced my position to guarantee a win. So if we know that's true, you're short at the lows. You might be like, wow, NASDAQ looks so bearish today because we're at the lows. The best looking long is 5 minutes after you short because everyone's short this name. So here's your long. And you can see just by understanding that we don't want to short low a day at all. You have to let it go and make some higher highs like this, and then you can try. You let it go 3 here, and then you can try, right? Even though it's really small ranges, because once you make low a day, we don't know. There's your crowded short position, and here's your profit taking. Now, if they were going to bring him all the way back down again, we could go like this: 3, down, up, down. And notice we're going to take people who are buying in this, because there's buying and profit taking at the same time in this. And you want to reverse against them so you have people to trade against, or algorithms to trade against. The over-encompassing term is market participants. Whoever that participant may be. It could be a computer, an AI, a person, Goldman Sachs, doesn't matter. Does that make sense? Savage ad. And according to your name, the Savage ad, hilarious. Isn't that from James Bradley? I think so. I have not seen that guy on Twitter or anything in a long time. Time of the day being important. Yeah, well, do you see? Did we just? Do you see what just happened? This is why you can't short low day. You short low day, it goes half a point and then stops you out right there. And then boom, the other way, instantaneous. This 2-2 reversal instantly puts you in a winning position. Is it not clear? Yeah, Rob Smith Power Hour. Got it. Yeah, so if you're going to do a savage ad, right, as your name suggests, what does that look like? It looks like this. You hit it and it goes boom, destroyed. The savage ad would be this. If it goes inside bar, and you can see it's really green right now, that buyer's still trying to buy this stuff. But if we go inside bar and down, that's the savage ad, because you took their money and you're like, screw you, I'm going to sell more. And when you do that, you remove liquidity. Everyone teaches on liquidity, and they all teach different things and teach it differently. But liquidity is simply resting orders. They could be buy or sell orders. So you got to think, like, let's say we go to gold. Why did gold move so freaking hard, right? Well, the first thing is the buyers were aggressive. That's true. Now, with very aggressive buyers, if everyone wants to buy gold at 240, it's going to go higher than 240. Or it's just going to sit right at 240, but rarely does it do that. If everyone, like a line of a million people, let me get my camera going while we finish up here. I'm not sure what's using it right now for some reason. Slack. I haven't shaved today, so ignore that. But that's low enough too. So when it comes to liquidity, and we can just look here, right? There's your rev strat. So we'll see if that kicks into the new low day. But liquidity is resting orders. So if you have an order book, imagine this is our order book. I might actually be able to pull one up. Let me see. Looks something like this. I don't know if it's going to let me blow that up or not. Yeah. So it looks something like this, right? You have a lot of resting buy orders and you have a lot of resting sell orders. So these sell orders are above price. The buy orders are below price. So that's liquidity. When you go back through a range, since you're triggering stops to go off, because traders were told, put your stops at obvious pivots like highs and lows, and put your stops where you got in or anywhere else within the range that you're trading. And that's true for us too. Like we put our stops in the range we're trading. Everyone does that. They have to have a stop somewhere unless you're an investor. And if you're an investor, you're not even an active market participant, which means you're not even affecting current price, the current moment. So the resting orders would be like this. In this chart here, we'll switch back over to the SPY. So you can have that in the background. Where did it go? Ah, there it is. So what you can then think is people who are buying, right, these resting orders, nothing to do with aggressive buying and selling. These are resting or non-aggressive participants because they're trying to buy lower prices, trying to sell higher prices. Now, when price, let's say price aggressively starts going to the downside, you have these resting orders, right? But you also have stops that are placed in this range of price as price goes lower that are going off. So you can think price drops $1, it goes boom, hits a stop order, and then it goes further. And then it hits another stop order and goes further. So it's like levels, like bang, 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 bang. That's what causes price to speed up. Because if we didn't have those resting orders, it would be 100% up to the aggressiveness of the seller or buyer. Like if Goldman Sachs came in here and they're like, we need to sell, or like, let's just say a small hedge fund. They're like, we need to sell 50,000 shares of SPY. So they come in, they hit the bid, boom, right there. So when they go in and sell and they trigger stops, the stops remove the liquidity from the market, which causes price to do this and speed up. So we can say when you trade back through a range like this, every one of these pivots will speed price up because you're removing liquidity from the seller. And back to the order book to really paint the picture. Imagine we have these stops. If there's a seller and they want to sell like 1 million, or let's say it's 100,000, or we'll just say 1 million, just for sake of example. If you want to sell 1 million shares, and let's say you would have to sell from current prices, so from the 0 level here, and you had to sell all the way through here to get that order filled with 1 million shares filled at the bid. Imagine we have 500,000 stops or 500,000 shares that get stopped out and they also hit the bid. Now, even though you have, you might have 1 million shares of liquidity between here and here, you now have to add 500,000 shares to this. Because if you hit stops and you are triggering more traders to sell while you are selling as well, it's removing the liquidity. Now we have to fill 1.5 million shares. So price might have to drop even further over here to get that extra 500K and completely fill everyone's stop orders and fill this aggressive seller who wants to sell at the bid. So when you trigger things to happen, or when you're trading, you need to think, if this reversal goes in force, who am I going to take out, right? So if we look at today on SPY, in the morning session, for those of you that are just jumping in, we're very specific. We're like, yeah, SPY, if this reverses on the second 15 minute of the day, it's going to make a new low a day, taking anyone who bought in the morning into a losing trade. So these buyers are the guys we're stopping out. And we have this seller that showed up on the second 15 of the day. So when it goes through that range, we expect it to speed up. And then the same thing is true. We go to the day. We had this big outside bar here. They're all buying. If we start going back below that, we're going to take out all of these buyers. So we want to line up the buyers with a signal back through them to speed up price in our favor. And this is why our signals should go instantly. You have crowded position, you're triggering stops to go off, and you have very big buyers and sellers. So for example, FSLY. Who do you think is causing FSLY to go from $8 to $25 in 2 months? Do you think it's Joe Schmo with trading 100 shares? Or do you think it's the people who are buying 50, 100, 150, 200,000 shares at a time? It's the guys buying a lot of shares at a time. So when the month is green, what it's showing you is you have those big buyers, the ones that need to buy a lot. Whenever the month is green, those big buyers are in there as far as we understand. So we go to a 60-minute. When we get our broadening range like this, and we're just going to mark the 3 out just to make it very clear to you. 3, broadening formation. So the buyers bought, and that was, you can see a very big buy order. The sellers come in and sell. And then it gaps down, and the buyers, they're like, oh my goodness, it gapped down. I can fill a bigger order. Because when it gaps down below, let's just say below 20 bucks, if the buyer's been trying to buy this thing, you can see it's like they bought it from 20 bucks to 22. They bought it from 20 bucks to 21 and a half, whatever it is. They're also willing to buy it down here at 18 all the way up to 21.6. So it's like they're buying it, it gaps down. They're like, oh my goodness, it's so cheap. So they go in and they buy more. And when they do that, we're triggering stops to go off. Anyone that's shorting within this whole range, all these red bars, we're triggering those stops to go off with this really aggressive monthly buyer. So if we go to in here and we go on like a 5-minute, FSLY, it's not the most thickly traded, but we can see as we go through that range, we're taking all these shorts into losing positions. And then once we get out of that range, these short positions, any short positions in this range, in this range, in this range, they're forced to exit. Because if you shorted at 21 and it's trading 22, you're in a losing trade. You're gonna have to do something. So what eventually happens with the broadening formation is in our course here, we get an expansion, which is an unwinding of positions. So we can see eventually when the range expands, since it's broadening, getting bigger over time, you get outside of the previous range, which is expansion, and then the positions in that range are unwound. The losing positions are unwound. So you can kind of picture you have some really big seller in here and you have some really big buyer in here. And then that seller comes back here, the buyer comes back here. And you see that seller is in here and the buyer is in here. So they're fighting back and forth. They buy and then they sell and then they buy and then they sell. And then here, the seller tries to sell more, almost gets their money back by coming back into this broadening formation. But then it acts as support. Boom, now that seller has to cover their short position. Because as price drifts away and they go into further loss, they have to do that. And the best example of that is like GameStop and AMC. Right? If we go to GameStop, what happened here? That's the question. Well, let's go to the yearly, just so you can see this clear. You can see they sold, and they bought, and then they sold. So they bought, they sold, and then it starts coming back through this range. Stops are going off, right? And while this is happening, institutions are trying to short GameStop. It hits all-time highs. Their shorts are screwed. Boom, right? Just keep zooming out. Boom, all the short positions have to be closed out. And that's happening during aggressive buying. So the shorts are buying the stock, the longs are buying the stock has to, it's just to the stratosphere, right? If we go to AMC, it was the same thing. Shorts all in here, and then it starts coming back through that range, blows them out of their position, all-time highs, and then starts coming back off those all-time highs all the way back to all-time lows. So this is all that's going on, right? We go to Meta. You can see they sold here, then they bought, then they sold, and then they bought, right? It's just the broadening formation playing out. If you go to a quarterly, you can see where this happened. So it started over here, 3, goes up, then down, then back up. Then you'll see a 3 again, a 3 again, and it goes back up, staying up, so it expands, right? This would be that breakout of the 3. This 3 happens, and it breaks out of that 2, goes all the way up here. Then it reverses, starts coming back through that range. So where's it trying to go? Well, this is your range of traders, all the guys who bought in here. So we take out everyone that bought, and now you're like, wow, this is the worst, right? This is the worst looking chart ever. I would never want to buy Meta at 150. Thank God I didn't buy, right? Thank God I didn't buy Meta. This is looking terrible. And then you'll see it reverses right there at 143, forcing short covering, and everyone's a loser who shorted Meta. So it's always bigger, bigger, bigger. So if we look at AMD today, right? New low, new high, new low, new high and new low in one bar. So it did both. Let's go to like a 1 minute so you can really see. Look at this. Gap up, new high, then new low, then new high again. Okay, and then it fails to make new lows. So it tried and then it came back in. This is consolidation. Stuck within that range. Then it makes new highs again, fails. Where's it going? It's trying to go down there. All the way down, and then it expands right here as resistance. So you get another move down right off the tick. So you want to trade from the top back through a range of traders who are losing. So if the stops go off, it speeds up in your favor. And then when you hit the bottom of that range, either the sellers are done selling, or the sellers have more to sell, and anyone that bought AMD has to sell with them. And you get this big expansion type of move. And until the 60s reverse, like we said earlier, AMD, this is your outside bar right now, 3, 2, where's it going? Well, if we zoom out, it's going down there. 1 penny below 189.02 would be the ideal scenario. Now, is that going to happen today? I'm not sure. It's fully up to, what the market wants to do here, because they've been selling all morning. They can reverse that. Again, the best looking chart and the worst looking chart, they're 1 bar apart. So SPY, in 1 minute, it could reverse the 60 like that, and things change. And that's why intraday trading, you just have to be aware, each 60 is like a new day, especially when the VIX gets 27, 30, 40, 50 bucks. Every hour will matter, especially with news releases and all that other fun stuff happening. And that's what makes trading good when the VIX is high. ARC. Yeah, so you just gotta be aware when things happen matter, right? They're selling still, that's just is good. And we did note that in my nightly vid, this inside bar signal. We had the 3 inside bar reversal, takes it out. Now, since we're coming into Friday, the weekly seller that's here this week, you can see them here. They have to come back next week. However, I don't want to say it's guaranteed, but man, I don't think the market's going up this month, right? SPY's definitely not going up this month. Hughes technically isn't. We have this huge weekly signal for next week. Oh my goodness, right? Dow Jones, they've been selling Dow Jones for 5 weeks now. You got the momentum shooter, IWM momentum shooter. Like, this looks like COVID. If you've never seen a COVID chart back in the day, let me go to SPY actually. Looks kind of like this, right? You get momentum shooter after they sell it off, then they keep going. This momentum signal is just momentum continuation. I'm under the belief that we are going to see some downside next week after what we saw this week. But that doesn't guarantee today, because today's already a 3. We don't know. It's a 3 already. Don't forget, they removed the buy button. Yeah, so with GameStop and AMC, they removed the buy button. Why did they do that? Because they were caught on the wrong side of price discovery, the wrong side of a broadening formation. So that's the only way it works. If those funds knew what broadening formations are, they would have been able to time their shorts properly. And it probably wouldn't have gone up as far as it did. And that's and that was the last thing I actually wanted to add I didn't get to. So when you remove liquidity, right, like we already explained, let's just draw it out. So we have a previous range, let's just say on the buy side now. So let's just say we have this downtrend, right? Lower highs, like this. When there's a buyer, let's just say we're trading GameStop, right? There's like 1 billion shares or whatever it is. When retail starts buying GameStop, they're buying shares and holding them. That removes liquidity because there might be a billion shares of GameStop, but if there's like 100 to 500 million shares that are just being held, not being traded, you removed half of the liquidity of Bitcoin. So when the buyer starts buying, they're removing liquidity by taking the offer. So it removes that order book liquidity. They're also removing liquidity because if they don't sell those shares again, those shares are removed from the market. They're not traded. Unless they borrow them to someone else to do short selling, that'd be the only way. So as price goes up, if you buy and you keep buying, you have the stops going off, which remove immediate liquidity in the order book. Then you have the buyer who's removing the actual amount of shares being traded on the exchange. And what this tells us is we want to make sure when we get a winner, we don't want to get out of it. Because if we were imagining like a stock, let's say the stock has 100 shares trading. If I go in there and I buy 5 shares and then the stock goes up 20%, those 5 shares were bought much lower. I don't want to sell those as long as it doesn't come back to where I got it. And then let's say a new signal sets up. I buy another 20 shares. I own a fourth of the company. So if there was a short seller who wanted to sell, even if they could, if they sold 75% of the company, that would probably, take my position into a loss. But let's say I add to my position, I have 25%, a fourth of the company. Then it goes up another 20%. It's like, okay, we're doing pretty good now. And let's say I add to it again, and now I own 75% of the company. And then let's say price keeps going, and we were right. We're up 100%. We own 75% of this imaginary company. If a short seller wanted to cause price to go down, or if someone wanted to sell the stock, if they sold 25% of the company, let's just say hypothetically, it probably wouldn't be able to come back to where I got it just because there's not enough liquidity for that to even happen. And that's a really extreme example. It's rarely going to happen on any exchange, or it's probably never going to happen on any exchange where someone owns 90% of a company and whatnot. But if we know at the extremes that's true, where it's like if I own 100% of the company, I dictate the price. I get to tell you what it's worth because you have to buy it from me. Then on a shorter or on a more grand basis, if price is going to go up 100%, we want to get as many of those shares as possible before it hits all-time highs. Kind of like Palantir. We go back. Because let's just imagine we could hypothetically buy half of Palantir. It's like we buy 5% here, add to it, now we have 10% or maybe 20%, whatever, if we're really aggressive. Add to it, we now have 22%, 25%, 30%, inside bar, and then boom, now we're in, we have half of Palantir. If it hits all-time highs and people are short Palantir and I own half of it, those shorts are going to have to buy even higher because there's not enough shares at their current price. Price would have to go up to a point where you have whoever bought it before and they're like, all right, Palantir, I got it at 8. It's at $80. Just get me out of it. I can't stand holding this anymore. It's too good. And they sell 1 million shares at $80. That allows the shorts to cover their short position at $80. And then let's say that happens. And then Palantir keeps going. It's like boom, 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 goes to 100. Then someone decides I'm going to sell 1 million shares at $100. It allows the shorts to exit their short position at $100. So wherever that price ends up being, that's where the shorts are going to be able to get out. If there is any, right? And this is just hypothetical. So if we're going to play, we want to enter, get as many shares as possible before it hits the highs. And when it hits the highs, if there is short covering that has to go on, or if it hits the news and everyone's like, Palantir is the best thing since sliced bread. If you own half the company, the shares are going to move much more volatile because half of the liquidity is in your bank account or in your brokerage account. You own half the company. So half the company is not even traded on the exchange anymore if you don't sell. So it's going to move a lot faster. Because if someone comes in, they're like, I want to buy 25% of Palantir. they're not going to have as many shares to buy, and it's going to have to go up faster. So we want to enter add until it hits the other side of the range. And then we don't know, maybe it works, maybe it doesn't. Now, if we go to indexes, while we were discussing, you'll see at the lows, double inside 15 breaks up, and you can see what happens. Everyone's short in the morning session right here. Pivot, 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 pivot. So we're quickly stopping these guys out. See if we go to the winners. Stopping people out. And am I saying there has to be stop loss orders above these highs? No. What I'm saying is, in this range, there was short selling that went on. It was going down. We go above it, and those guys now have to do something. Either they're going to sell more, the broadening formation, right? Higher high, lower low. Or they're going to get out of their short position, and that'll force prices up. We got about 23 more minutes today. Is this the markup correct on NQ? Yeah, that's good. So the thing with the threes is it's better to know they exist than to be the perfect drawer of broadening formations. And what I mean is this. There's only so many ways a three can happen. And in reality, there's like 2 or 3 ways. A three will always look like down, and then it goes green if it's going to the upside. So this has to happen every time before a 3 happens. And then it goes 3. So we can scan just for that, right? We can look for just that. The other thing that can happen is it happens in 2 bars instead of 1 bar. These 2 bars are a 3 to the previous 2 red bars. So this is a broadening formation, the same way that this 3 is a broadening formation. And since we know how broadening formations work, where price is going to go up and down and up and then down and up, right? And it's going to do this multiple times. What we can do is we can use these levels as reclaim. So just knowing that 3s exist, when it makes a new low and it starts reclaiming, we already know. Boom, boom, there's your target. And it goes up here, reclaims. Where's it going? Down there. There's your target. So what we can say is, since a broadening formation, that looks like this, is the same thing as a chart that looks like a 3, we can mark those highs and lows out. So we don't have to be the master drawer. We just have to know what a 3 is. So we go and SPY 3 on the day. New high, right here, it's resistance, back to the lows. And that's it. That's all she wrote. We go to gold. I mentioned this short to a friend. I'll show you. Make sure nothing sensitive's here. You can see gold, XAUUSD, gold, 3 on the day, goes up, and then it's coming back into the 3. Where's it going? Down there, right? That's as simple as you can make it. So, and I'm actually not, I'm not sure why. It looks like the chart on gold, let's see, maybe it's a different one I was using. Pepperstone? Yeah, Pepperstone. But it makes it really simple then, because if you know what a 3 is, you can trade it as resistance here to go to the other side, and that'd be a simple way to do it. And when you see a 2 down in green or a 2 up in red, you know it's potential 3. So like in here, 2 up and red. That's potential 3 to what? Well, here's your broadening formation right here. This is a 3, goes to the top of the 3, boom, to the penny at the bottom. Then it goes inside and it restarts, starting a new 3 right there. So if we go to like a 60, you can time it. You don't have to be you don't have to be the first guy selling up in here. However, you can, right? You could have tried to time this here. What we want to see is we want to see them sell. So they sell, they buy, and then we can go for it right there. And then same thing. They buy after selling, we can try and sell it here. We can see they buy, they sell, and then they buy it here. We can try again to sell it here. So we can trade off of this bigger broadening formation that's occurring out in that. And this one, it's going to be harder. Most people, may not be doing that. But then you have a 3 right here. So just knowing there's a 3 right here. It goes down, starts firming back up. Where's it going to try and go? Potentially back through here. Now we get another 3. And you can see it breaks out of that into the previous one. So it goes and takes the highs out. Then once it's made the new highs, it comes right back below it. Notice, went 3.9 points higher, and then boom, 86 points lower. And that's the key. If you can risk 4 points and make 100, even if you can only do it like 20, 30% of the time, beautiful, right? You just have to know that 3s exist. So even right now, we can see this. New low, and then the second it starts coming back, we could try and do that, right? And we'd have to time it with a signal like this. 2 down, 2 up on the 15. And you can see we're pairing all these sellers with a buyer that's showing up right here, trying to take them out. And maybe that works, maybe it doesn't. We'll have to see. But I'm already done for the day. Shorten this AMD and the SPY. That being said, we can see AMD stopping some guys out. You'll see the 3 on AMD. So we want to stay out of that 3 ideally. And we'd want to see this one. Lower low, higher high, and then try and kick in again. So the VIX is expanding now. It depends on the time frame you look at. Let's look at the month. Daily then hourly? No, we go month, week, day, 60 minute. So we always start at the month, or you can even start at the quarter and year. The reason is because the big 3s matter. Like VIX, right? Slight lower low at 13, and then it goes all the way to 36. You're not going to see that on a 60 minute, right? If we go on a 60 minute, you're never going to see that happening, right? You're going to have no reason to believe that this is anything special here at 13. But then once it reclaims, 13, it reclaims all these lows. Again, just knowing 3s exist. We take out, you can see, up, then down, then up, then down, takes out all those lows, comes back above them right here. Uh-oh. Boom. There's your big 3 like that. You can see they act as support as levels of reclaim. And then all the way through the big one, right? Down, then up, then down, then up. So you're never going to see that, or it's going to be very hard to see if you're not using higher time frames. And we have things called time frame continuity, multiple time frame analysis, confirming and negating. All of that stuff relies on at least 4 time frames of analysis. But if we look at the VIX, the question was, is it expanding now? It is not. It already expanded because this range got bigger to here, and it got lower here. If we go to the week, you can see it's reclaiming on the weekly basis. And this is always historical, so you can see this would be the weekly broadening formation historically going into the new trading week, knowing where that level of reclaim would be. They go up, gap up, and then they start selling it off. You see they're just shy of taking that out. That's called gap up sell. So they sell it, didn't reverse anything though. So we'll have to see what comes of it. We go to the 60 minute now, since the day has nothing for us. This is what your 60 minutes currently dealing with. New high, new low. They're trying to go to new highs, which would really help out the SPY if they could blow through that. Here's your SPY. You see the 15 minute. Anyone with a tight stop, they get stopped out. Boom, boom, boom. 2 up, and then red, it's trying to go 3 to low a day. Because you have pivot, 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 pivot. Pairing today's seller with anyone that's trying to buy this stuff potentially. And we're still inside 60, so we'd prefer to see that, but what? We got 43 minutes, so it's more likely that becomes a 2 to the downside. But we'll have to see. Qs is still inside 60. Dow is morning lows getting taken out. IWM is still inside 60. So we still have a lot of insides, but we had some slight stopping out of the tight stop shorts. Form. So form back to 68. So this is why continuity matters. You see the week, how it's green? They're buying this week. So how is it going to go to 68 if they're buying this week? It can't. The only way the week can go lower is if it's red or if it gaps, right? So what we can say, you could say it reclaimed, and today the buyers have control. It's a 2 up. Control is always 2 up or 2 down. Shows you who has control today. So buyers have control today. The weekly buyers are more aggressive. We can say sellers have control this week because it's a 2 down, but the weekly buyers are more aggressive than the sellers. So this week they're buying. Today, that buyer was here this morning. And then we go right now on the 60 minute, they're buying right now. So it can't go down. They're buying right now on the 60. Today, the buyers have control. And this week, the buyers are more aggressive. And I imagine the month. Yeah, the month is scenario 1. So we can say there's no control on the month. It's consolidation. The buyers are more aggressive. However, it is a downtrend this week. The daily buyers have control today, but the sellers, very slightly more aggressive. It's like 0.22, so barely any selling going on. And right now, the buyer's here. So it can't go down. The only way we can get this to go from here, 91 to 70, is if we're below the month, week, day, and 60 opens. Because if this month is going to go from here all the way to here, the week is going to have to be red next week. It's going to open, and then it's going to have to be below that to start going in that direction. The day would have to be red. The 60 would have to be red. So right now, that's not happening. And that's time frame continuity. If you go to, and that's really the bread and butter of this. If you're like, how do I know the broadening information is happening? It's time frame continuity. And we don't have much time to explain it here today. But if you go to buy, sell indicator, Alex's options, should be able to see it here, right here, the time frame continuity principle. This will show you how to know when price is going up or down. And you want to combine it with what we talked about with broadening formations, knowing about crowded positions and where that happens. Because just having, what would you say? If everyone's selling, the month is selling, the week selling, the day is selling, the 60 selling, everyone's a seller. So it could be a crowded position, which is why we need to time that buying or selling through a range of people who are on the wrong side of it. Because even if it's a crowded position, if you have a ton of shorts that have to cover, it's not crowded yet. The shorts still have to cover. We'll see SPY, they tried to take them down. You can see it took some guys out, but then reclaim right back in the middle. So it didn't work. They're still an inside 60 minute. And this is why we don't like trading inside bars, because they go both ways. No good. MU and SNDK. Well, MU, is it going up this month? Yes. We identified this on our Monday night vid. We saw this. Monday, they bought it. So the week, the month, or actually, I don't think the month. The week was green, the day was green, 60. So the monthly seller was not here on Monday. Then Tuesday, they came to buy more. Wednesday, they came to buy more. Do they really want to buy MU? Well, they bought it Monday, Tuesday, Wednesday. I think so. Thursday, they sold down, but notice, the weekly open is at 363.96. You're nowhere near changing that. So if you bought it Monday or Tuesday, you'd reduce, right? And then today, sadly, I wasn't watching it. Today, that seller yesterday is met by the weekly monthly buyer who has more shares to buy. Right at the open, and so it goes boom. You can see how fast that was. Because the daily seller, they're like, yeah, I sold short, right? It closed here, about even. I'm just going to see if they roll over tomorrow. They open up their chart and they're like, MU's gapping to yesterday's highs. Get me out of this thing. And you're pairing that guy with the monthly guy who saw MU tick below last month's lows. And he's like, this thing's cheap. I want to buy MU. We're not at all-time highs anymore. Gives me a chance to buy it. So that monthly guy's in there this week. And you're pairing it with the daily guy who thought MU is rolling over, as they say. Now, at this point, though, since you've already taken out all those short sellers, that was all she wrote. Not much else. And you can see SPY ticked down, so they tried to sell it. And you see they reclaimed that. trying to go the other way. So the broadening formation is really small in here, ticking up, ticking down, going like that at this point. And this is why, again, when you have this big downtrend, we want to see them triangle lay out. We want to see all these highs get taken, all the nearby stuff, so we can get, something like this, all the way down, all the way back up, and then all the way back down again if we're really going to get a sell. So we might set that up in the afternoon. We might not. We'll have to see. Let's go to SNDK. Same thing. What did SNDK do? Reclaim last month's lows since we know threes exist. How did it do that? A gap down buy on Monday. So look at the week. Did they sell last week in the previous range? They did. Right there. When it comes back above that, 527.33, where's it going? Up there. 25% returns on the week. 23% returns here. They dropped $10. They rallied 120. It's 1 to 12 if you're just, putting your stops at lows. That's crazy stuff. But they did the same thing as MU. They sold yesterday. The week was still bright green. The day opens, goes green. Today they're buying. Yesterday they were selling. Covers the shorts. Take them all out. You can see this morning, they buy, they sell, and then that's when we would want to get after it. Right in there. Western Digi too. Yeah, same thing. 2-2 day, green week. And it's really a lot of tech stuff. PNW, crowd, not much. D-Dog stops them out. See if that's for next week, if it sets up. So there's still leadership. It's just not across the board, right? Meta still puking. You can see how this happens on the 60-minute. 3. Memory chip stocks, yeah. You're in SNDK. Hopefully you didn't buy it just now. But this is your broadening range. So remember, if we're going to cause a short squeeze, well, the market's, everything's going down. SPY's going down, Dow, IWM, Qs. Everything's going down. What happens when SNDK starts breaking out of this stuff, right? Well, anyone trying to short SNDK, like, this thing is way overvalued. I don't believe this. Above 700, that's when they really get put into the blender, so to speak. RMBS. Ooh, hey, good stuff. Look at that. And this is why it's so important to know. Look at 15 cents lower. It's already up $11, trying to go up $54. That's crazy, right? But there's your broadening formation. We were actually watching it back in here. Now, this is even better. Look at all these pivots we got. Man, what a great looking chart. Good stuff. Great find. TBJ11, great find. Reminds me of the Oxy yearly, just how good it looks. You see how, look at the big 3 on Oxy, they go up. Wow, what kind of wind is that? That's crazy. They go up, they drop 90%. So good luck holding that. And then they're working on their way all the way back up, 1,200%. Vertical spreads a week ago, good stuff. Super windy in Chicago. I mean, it hasn't been that bad here, but there was like a huge gust. It sounded like my windows were just gonna freaking blow off the walls. Crazy. So you can see SPY. They're really going back and forth. And this is why people, they'll say, oh, the strat doesn't work. Because they're looking at a 3-point range and they're like, it's got to hit the other side of the range every single time. It's like, well, if your grandma's trapped in a short and she covers her position, price might go up at 2 pennies, right? And that's what this small range stuff is. It's like, we're trading with all the people who are just grinding their funded accounts, right? Tight stop, ding, 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 ding. But we want the big range, big stuff, not the tiny stuff. Oops, sorry about that. I do not trust the markets to go long, only dividend stocks. Yeah, well, based on what we know, the fact that they're still buying those chip stocks is a good thing. You know, if you want the market to go up, that's a good thing. The real test for this is next week, because they sold the first week of the month. They also sold, you're going to see on the year, they bought the first month, January, sold the second month, came back to sell the third month. So what happened? They bought some and they're like, yeah, no, we're actually not investing in SPY this year. Never mind. Sell, get out of that. And then they're like, we're going to keep selling. They sell more. So what's happening? The seller came back to sell more. Why does that matter? Because when the seller comes back, that's when things start really unwinding and people get scared. You're going to see like this. They sold March. They came back to sell more below March's low. Oh my goodness, destroyed. Everyone starts freaking out, right, on tariff stuff. And then hammer everyone that freaked out and got out of their long positions right there. Reversal back to the upside. There it is. So they sell. They came back to sell more. This is not a good thing. The same thing will be true on the week, though. They sold the first week, came back to sell this week. Uh-oh. What if they come back and sell more next week? This is going to be kind of bloody, right? This could be an issue. So we just have to be aware of what's going on there, at least in the simple sense. We're seeing actual selling showing up here. SPY. Qs, not so much, right? You can see they're really tussling back and forth in the Qs. But we have this weekly shooter now, right at the bottom of this thing. So that kicks in below 591.33. It must stay below that, right? If it's not below it, it's bullish, back to the upside. But if they're below that, that could cause the breakout of this multi-month consolidation we have seen in Qs. Because the 3 here will time the break of 580, and that will cause some panic potentially. But then the next thing we're going to do is we're going to look to go like this. Bang, bang. And you've heard it here first. It might go a little lower, right? It could go all the way down in here if it's really bad. But you're going to see this year. And if you don't see it, I'm going to be extremely, extremely surprised to not see something like this. Very, very surprised. Now, it could go, since we know how this works, it could go 1 penny below and then all the way back through. So we just got to be aware of that. But I genuinely think we'll see something along the lines of this. This year, now if we go to Dow Jones, they're already destroyed. Look at this thing. Right off the top of that, you can see a crowded long position paired with a reversal. Tight stop, guys. They're out. Dink, dink, dink. So look at this week. They sold this week, came back to sell more, came back to sell more. They're selling Dow Jones, right? Irrefutably, that's what's happening. And then you go to MU, right? Way different. They bought it back on the second week. Or was it? Yeah, they bought it back on the second week of the month, so they just came back. S&DK, they bought it back on the second week. He's got a lot of threes in there, so you'll have to see those broadening formations and how they shake out next week. See SPY, they're still just dancing around at low a day, crowded short position, waiting to see if a seller is going to start stepping up so everyone can start making money on their puts. You see SPY now, we have the outside 30-minute broadening formation for sure. And the question then becomes, how are we going to get outside of that broadening range to expand it? Currently, they are 3, 1, 5-minute. So maybe the 5-minute breaks down, they try. That'd be momentum though. So we don't know if it's going to hit low day and just really go or not. No idea. But as you get into the close of the week, what I want to tell you is these charts are not looking good for the buyers. Now there's relative strength in some things, right? Some chip memory companies. Outside of that, let me just close off the stream by showing you what we know to be true this year. For this month, I mean. This month, we have 700 downtrends on the month. Now you'll notice not all of those are bearish, right? Because 2s do go 3. But if we go look in here, let's see who's the biggest losers. Victoria's Secret, Home Builders, Nail, SCCO, Basic Materials, Wing Stop, Love Airlines, probably with the closures due to the war and stuff in different regions. I'm not sure. But there's a lot of airlines that were down this month. Cruise lines, travel, more materials, a lot of industrials, tons of industrials, more consumer cyclicals, there's some staples in there also coming back. So we got a good mix across the market. A lot of home builders, UPS, industrials, United Airlines industrials, Love Airlines industrials, Yeti, the flask company, Dollar General's down 13%. So it's like they're selling. Lululemon, right? We call this the white girl stock trade, like Macy's and Lululemon and that type of stuff. Really hitting the lows as people just can't afford or decide not to buy that stuff anymore. But home builders, again, keep going through the list, more cyclicals, Chipotle, right? So we got a good amount of stuff selling. That's true. Now this week, 1,000 names trending down. So we go and look in there, who's really getting wrecked this week? Wing, energy, healthcare, and some tech companies, solar, T-TAN? No, I think TAN is solar, so not solar. And then more healthcare. GoDaddy, obviously home builders, Roblox, the pedophile ring, Adobe, Figma, DoorDash, Elf Beauty, gold stuff, GitLab, right? All the gold miners, Crocs, Dollar General. So you can see we have a lot of names that you've heard of, not McDonald's, but Boeing. And there's a ton more. But we have a lot of downtrends, 1,000 this week, 700 this month, 600 today. Now, if we compare that to uptrends, let's see. 2 up month, only 400. So you can see the downtrends almost doubly outnumber the uptrends currently this month. This week, 262. So we have 4 times as many downtrends this week. And you can see these are your leaders: NBIS, DocN, FSLY, CE, all this fun stuff. CRDU, interesting. Then today, it's a little bit better. You got some more uptrends today. But the top of the list is inverse gold, inverse gold, inverse gold, which is hilarious. And then you got MU, SNDK, HP, inverse QQQ, inverse Tesla. So you can see at the top of the list, which is inverse ETFs. It's like, that's not a good thing. So I'm not going to say it's full-fledged market crash, nothing's going up. But what I will say is we have way more evidence on the downside this month. We saw a lot more selling this week. And even today, we're still seeing more selling than net buying. So objectively, SPY, they're trying to go down here. They still got 10 more points to go. And then we'll discuss, right? Do we see that reclaim, or do they start really panicking, seeing the VIX blow up and whatnot? So I don't think there's anything bullish at this point. However, as we know, things can change. So we're going to watch last week's lows into the close here, 662.39. That's where we want to see it. And that's all I've got for you guys today. So if you enjoyed today, it was, I think it was a fun day, a lot of educational stuff, but also some great real-time analysis in the morning, trading those big broadening formations beautifully. And still seeing things like AMD and whatnot at the lows. You're in winning positions if you followed what we discussed. So either let them win or don't. That's up to you. But that's all I've got for you guys. I hope you enjoyed. Check us out at stratalerts.ai. We do have live streams, and the prices are, in fact, going to be changing soon. So if you're interested, stratalerts.ai/premium access. That's where you can go and check us out. And I will see you guys hopefully in the future. Adios, everyone. Have a good rest of your weekend. I'll see you in the weekend vid.